Well, good morning, Revenue Committee members. Welcome to our fourth and final meeting for the 2020 calendar year. As you can see, we have a busy 2 days ahead of us with some of our favorite topics to discuss once again. With that, Josh, if you would call the roll for this morning.
Senator Baldwin.
Present.
Senator Beitman.
Here.
Senator Driscoll.
Excused.
Senator Ellis.
Present.
Representative Blackburn.
Here.
Representative Connolly.
Here.
Representative Dayton Selman.
Here.
Representative Hallinan.
Here.
Representative Larson.
Here.
Representative Roscoe.
Excused.
Representative Sweeney.
Here.
Representative Western.
Here.
Co-chairman.
Can you repeat that, Josh?
Co-chairman Case.
Present.
And co-chairman Swanitzer.
Here.
We have a quorum.
Excellent. Well, with that committee, before we kick off electricity taxation discussion, as you're all familiar with, we did put it in the morning of the first day this time, so we're all awake.
I'm trying to. I'll get you muted. Give me 1 second.
Not a problem. With that, I know Mr. Noble from the Department of Revenue is on, as well as 5 of our new members who are joining the Revenue Committee in the 21-22 session. So welcome to the new members. At any time, if any of you would like to turn on your videos and ask questions to the presenters over the next 2 days, feel free to do so. We will treat you generally as complete members of this committee besides voting privileges. But if there's anything you want to ask any of the witnesses or presenters, just turn on the screen, raise the blue hand, and I will certainly call on you. I'm going to run the meeting this morning session. Senator Case, my co-chair, will run this afternoon. So with that, let me make sure there's no updates from the Department of Revenue before we kick off 3 hours of electricity talk. Welcome, Mr. Noble. Anything to report on the revenue end of the state briefly, or any opening comments you may have?
Mr. Chairman, nothing new at this time. I shouldn't say nothing new. We went live with a new system in the liquor division, and we've been dealing with those challenges over the last couple of months. But other than that, nothing really substantial to report. I'll be here for the next couple of days and answer any questions you may have. Thank you.
Thank you, Director Noble. All right, with that committee, if nobody else has any opening comments, we're going to discuss electricity taxation this morning. As you know from your agenda, we do have 2 proposed bills, 21 LSO Draft 345 and 21 LSO Draft 134 on a wind energy production tax. Just so everybody's on the same roadmap, my plan is to present both bills, put them both on the floor and talk about them. That way, anyone who is here to present, and I believe we have 32 people signed up who may wish to testify, can talk about either of the bills or both at the appropriate time. Then we'll close public comment, work either or both bills, depending, and hopefully it'll be lunch by about then. So if anybody has any opening comments before we get started, seeing none, we'll just kick right off into, this is one of our Management Council assigned topics. As a co-chair and I were reviewing everything that we were directed this interim. This was one of the several places that we had not fully covered, especially on electricity generation taxation in general. And then I know this committee and Representative Hallinan specifically had talked about the bill in version 4, 134. And so we wanted to give that piece of legislation an opportunity for public comment and consideration by the committee as well. So with that, I know Josh is on the phone, and I think Dean is also on the phone. If you look through your material handouts, you'll see that LSO has provided a bill draft and some financial information on The taxation rates was sent. I believe we'll start with talking about LSO draft 345 on an electrical generation tax, on how this would work and maybe some of the statutory construction. Mr. Anderson, do you have any opening comments, or do you want to walk us through the legislation? I'll certainly turn it over to Senator Case at any time he would like to jump in, but figured I would give you the floor first. Josh, go ahead.
Yeah, Mr. Chairman, if you like, I'm happy to quickly walk through the bill. This bill is the same, you may all recall, as a bill we looked at in 2019 at our November meeting last year. So it should look fairly familiar. So I'll just quickly kind of walk you through it. It creates a new chapter 24 for a tax on electrical generation. Pretty much all these provisions mirror the existing wind tax chapter. And so that's where most of this language comes from. Going over to page 2, the imposition section, you'll see there's a tax imposed on the privilege of producing electricity in the state on or after January 1st of 2022. In this section, the tax is imposed on a per megawatt hour basis, similar to the wind tax. You will see there was also some discussion of doing it on gross earnings. And so later, there's a staff comment where you can see what that would look like if you wanted to do it in a gross earnings type. Over to page 3, you can see the taxation rate is on $1 per megawatt hour, similar to the wind tax, at least in this draft, Mr. Chairman. Exemptions, again, are similar to those that are in the wind tax. There's an exemption for facilities owned by the federal government or the state of Wyoming. There's also an exemption for electricity produced for personal consumption. Over to page 4 and 5, these are all just the general reporting, payment and timelines, and then the enforcement provisions, the auditing provision, interest and penalties. These are all the same as the language that's in the wind tax bill. And over to through page 7, again, there's the language for liens and the tax sales. Bottom of page 7 and over to page 8 are the tax remedies. This is a little different here. There's a credit for all excise, sales, use, severance, and ad valorem taxes paid by the same taxpayer. That credit also extends to severance taxes paid on the mineral, if a mineral is used to produce electricity even if that severance tax is paid by another person, as long as that information can be provided to the department, they would still be eligible for a credit for that. Over to page 9, distribution. This, at least as currently drafted, would go into the general fund. And then here in the staff comments on page 9, you can see that as we discussed last year, there was also discussion of doing this on gross earnings, which is how Idaho imposes this type of tax. And so you can see there over to page 10 how the imposition language would change, where the tax would be imposed on the annual gross energy earnings from energy produced in Wyoming. And then the taxation rate would be 3.5% of the annual gross energy earnings. You'll see in that staff comment that it may be appropriate to define gross energy earnings. I believe in the Idaho legislation, they exclude some costs that would, or some earnings that would otherwise could be considered gross energy earnings. Finally, Mr. Chairman, you'll just see there's a conforming change on page 11 to and for the definition of this act for the whole of Title 11, or Title 39, excuse me. With that, I'd take any questions, Mr. Chairman.
Thank you, Josh. Any questions from the committee on the statutory construction of the bill at this time? Right now, it does have 3.5% as the rate in there. Would I be correct? That's what mirrored, is it Montana or Idaho's? I can't remember where we got that percentage, and we'll turn it over to Dean here in a second to talk about different financial structures with that tax rate changing. But do you remember, Josh, where that 3.5% came from?
I do not recall that specifically, Mr. Chairman. I don't know if Dean remembers that. I think he may know that.
Okay.
Mr. Chairman, Chairman Zwanitzer, it's my recollection that the 3.5% was the rate that Idaho uses.
While we have you, Mr. Temte, let's just turn it over to you. You also provided this committee, I guess, a memo or a kind of a master chart of how this tax would be implemented and the different scenarios depending on the rate of the revenue it would generate and which industries proportionally it would affect. And I think it says like 88% fossil fuels, 11% wind, and some geothermal. If the committee all has that memo, maybe is now a good time, Dean, to just walk us through that?
Mr. Chairman, that would be fine. I would ask Katie to bring up that specific document, and I'll be happy to walk you through it.
Great.
Yeah, this is the document right here. Chairman Zwanitzer, Mr. Chairman, members of the committee, you will recognize this chart. It looks very similar to one I had provided also last November at the November Revenue Committee meeting when this topic was discussed. This particular chart, it does go with the concept of basing this tax on gross revenues rather than on dollars per megawatt hour. I know this chart looks very busy. It's basically trying to present estimates at 4 different rates. The top rate is showing a 3% tax on generation revenues. The second one down is the 3.5%, the percent used by Idaho. There's also a 4% below that and a 5% rate below that. The structure of this estimate is pretty much identical as what I presented to you in November of 2019. However, that estimate I provided to you in November 2019 was largely based on 2017 data from the EIA, or Energy Information Administration, the Federal Energy Information Administration. This particular estimate is updated based on 2019 data provided by EIA and also updated based on fiscal year 2020 Wyoming tax information as well. I'll cut to the bottom line first, Mr. Chairman, and then kind of walk through the calculations. If you look at the, let's see, 1, 2, 3, 4th column from the right, you will notice that at 3.5%, at a 3.5% tax rate, based on the 2019 data, this tax would raise roughly $33 million. If you go to the lower rate, the 3% rate, it would raise roughly $16 million. At the higher rate of 4%, it would raise roughly $50 million. And at the highest rate shown on this page, at the 5%, it would raise $84.3 million. And these amounts are calculated based on 2019 electrical generation. In other words, the megawatt hours generated in 2019. And as you can see, in 2019, the energy mix was 80% of the electrical generation came from fossil fuels. Now that does include oil, gas, and coal, but I would tell you that of that 87%, coal makes up the overwhelming majority of that power generation in 2019. Of that line, fossil fuels, I believe coal makes up 96% of that power generated. If you move to the next column over, it's just providing an indicator of the amount of this energy, the net interstate exports, according to the EIA, was almost 55% in 2019. The next three columns are just, the next four columns actually are just trying to come up with estimates of the tax credits per megawatt hour that would be allowed under this particular scenario. The first one being the estimate of severance and gross products taxes. The next column being the estimated wind generation taxes per megawatt hour. And then also estimates of the ad valorem tax per megawatt hour and the sales and use tax per megawatt hour. The column that's pretty much in the middle of this spreadsheet is the estimated gross tax revenues from electrical generation. These amounts are just computed basically by taking the megawatt hours generated in the first column and multiplying them by 8.1 cents per kilowatt hour. That was the average retail price of electricity generated in 2019, according to EIA. Once you get past the gross revenue number, we then are just coming up with estimates of the tax credits for severance and gross products tax, the wind generation tax, the ad valorem tax, and the sales and use tax. As you can see, based on these estimates of the taxes per megawatt hour, and then taking them times the megawatts in the first column, you will see that there would be a total of 86,418,000, roughly $86.4 million worth of tax credits that could be applied against the estimated gross revenues. And then, as I had referred to before, the net revenue after credit for taxes paid, the almost 16 million at the 3% rate, 33 million at the 3.5% rate, 50 million at the 4% rate, and 84.3 million at the 5% rate. The columns to the right of there are just attempting, the column to the very right is just attempting to come up with an estimate of how much the tax impact per household would be. And that ranges from $4 to $20 per year, depending on the rate. Mr. Chairman, I think I will stop there to try to respond to any questions that people might have in regard to this estimate.
And so let me just, thank you very much. That was a great presentation. So on the annual household impact, under the 3% that I think Idaho charges, it's roughly $4 per household per year to raise about 16 million. And that's on households, right? So if we could, and I know this is data and not the question, I guess what I want to reiterate to the committee is this is a tax that's mostly would be paid by out-of-state electrical consumers. And then what, 80%, a little over 80% is paid from out of state, and then in-state roughly, I don't know, 15, 14% paid by the larger industrial users and 3 or 4% paid by the average residential customer. And so this is another way of increasing some revenue to the state with a minimal impact, I would say, on the average residential household. Certainly does have impacts to our larger industrial users, and obviously the money comes from somewhere in all of these aspects.
Mr. Chairman,
Senator Case, go ahead.
Mr. Chairman, I think your numbers are for, roughly they're correct for Rocky Mountain Power.
Okay.
So I think if you look at all the utilities in the state and all the generation in the state and all the consumption in the state, it's a smaller number that's exported. It's still a good, great number, much better than the lodging tax, but it's in the 55% realm. But within Rocky Mountain Power's territory, it's about 85%. You also, you have correctly identified the biggest stumbling block to this. It's a wonderfully powerful tax, and it impacts small commercial and residential customers very little, tiny. But it does potentially impact our large industrial customers. And I actually have a proposed amendment that actually would allow for rates to be developed that flow through these various tax credits that you can see. And there's a tax credit. And these are credits, Mr. Chairman. They come right off the tax bill. So if a producer pays a wind tax, whether it's the $1 per megawatt hour or the $2 that's proposed in the other bill, that comes off the tax burden 100%. So that's a very powerful thing. And it's the same with the ad valorem and the severance and the sales and use taxes. So all the taxes come off, kind of following our Constitution. But if we were to go one step further and think about the rate-making process in Wyoming and actually perhaps require the Public Service Commission to flow through the tax credits for our large industrial customers, they would see proportionally less impact from this. And in fact, they might not see any impact at all if we were to require that. So indeed, it is a powerful way to raise money from outside the state. And if I could just continue just a little bit, there are a couple of points I would make about it, Mr. Chairman.
Are there questions for Mr. Tempe on the numbers right now, Senator Case?
Well, Mr. Chairman, yes.
Okay,
I want to
go
make out for sure that there was some concern that the wind production tax was not deductible. And I just want to be very clear that this does come off the tax burden, right, Mr. Temke?
Mr. Chairman, Chairman Case, that is correct, and that is reflected here. It is the column, it's roughly in the center. There's a column that says wind generation tax credit allowed for wind electricity producers. Mm-hmm. That's the 4,125,000 number.
Perfect. And then, Mr. Chairman, we also know that, for example, if you were to use coal to produce electricity, there's a lot of tax burden with respect to coal, but the utility itself probably isn't paying the severance tax on coal or the ad valorem tax that the coal producer might be. In some cases, the utilities do own mines, but for the most part not. So, Dean, is it clear that we actually reach upstream into the production and ascribe the credit to the mineral that's included in the price of coal, to including severance and ad valorem? And the same for natural gas, of course. Dean?
I'm sorry, Mr. Chairman. Actually, I got a message that my internet was somewhat unstable. And therefore the sound cut out a little bit towards the middle of your question. If you could quickly ask it again, I will try to respond.
Thank you. And
Go ahead.
Mr. Chairman, Dean, the question was that the deductions on this sheet include severance and ad valorem taxes paid by mineral producers that may not be utilities, that they're upstream in the sales process.
Mr. Chairman, Chairman Case, that is correct. The estimate of the severance and gross products credits in these calculations is $26.3 million at under all four of the rates shown.
So case follow-up, and then I'll go to Representative Connolly after you. Go ahead.
Yes, I'm very close. So, and also, Mr. Temke, if you were producing electricity with wind and you had ad valorem tax on the wind, property tax on the wind generation units, that's also can be a credit to the tax bill, correct?
Mr. Chairman, Chairman Case, that is exactly correct. Again, the ad valorem tax credit is the $49.5 million column just to the right of the wind generation tax credit.
Great. I think I'll let other people ask some questions of Mr. Temke, Mr. Chairman. Thank you so much.
Thank you. Madam Vice Chairman, go ahead.
Thank you, Mr. Chairman. Mr. Temke, I've got, I think, two different questions. The first one is kind of just based on the megawatt hours, and I'm curious what you know about coal-fired plants closing down. And so I understand that these figures are accurate for 2019, but what do we expect going forward?
Mr. Temke, if you want to postulate.
Thank you, Mr. Chairman. Mr. Chairman, Representative Connolly, you are correct. This is based on 2019 information. As I observed how this data changed from the 2017 information to the 2019 information. It stayed pretty much the same. However, the percent of fossil fuels did go down from 2017 to 2019. And as I will discuss when we talk about the other bill, it is anticipated that the contribution by wind power will increase in the future based on wind projects that are coming online to produce electricity in the very near future. So yes, I would anticipate that that fossil fuels percentage, that 87%, will go down, and particularly the wind percentage will increase.
Thanks, Mr. Chair. And Mr. Temke, so then would it be fair to say that the figures that we're looking at right now are really fluid, honestly, and there are some major changes that are expected within the next 5 years?
Mr. Temke, is that fair to say?
Mr. Chairman, Representative Connolly, I think that is a very fair statement.
Okay, thanks. And I'll save my second question for later. Thank you.
Okay, let's go to Representative Hallinan. Floor is yours.
Thank you, Mr. Chairman. Just looking at this graph, the amount that it shows there for the net after credit for taxes paid, $14 million for coal, that doesn't say that the amount of taxes they're going to pay 3% on. I guess that's 3% of that. However, the amount that they're going to pay is going to be deducted for the amount of credits that they have. So the amount of taxes that they pay might be way less than 3% of $14 million. Isn't that correct?
Mr. Temke?
Mr. Chairman, Representative Hallinan, actually, I don't think I agree with that statement of yours. They wouldn't be able to take a credit of the electrical generation tax against their tax for electrical generation. Their credits would be in the form of the severance and gross products taxes paid, the wind generation taxes paid, the ad valorem taxes paid, and the sales and use taxes paid. those are deducted to arrive at that net revenue number, the $16 million total, the 14.2 million for coal. So I don't believe there would be any additional credits subtracted from that $14.2 million number.
Follow up, Representative Hallinan?
Yes, Mr. Chairman, thank you. Well, it seems like a tax credit is the amount of taxes are forgiven for the amount that they have already paid in these other forms and these, these first three items. So that would be based on the net amount of taxes that are owed on their profit. 3% of the 86 million, I guess, is the amount of business they're going to pay tax on. And then the tax credit is the amount that's subtracted from that 3% figure of the original amount. So I really think that the amount of taxes that they pay would be way less than $14 million. I think that's the way it would be done.
Mr. Temte, can that scenario feasible in your mind?
Mr. Chairman, Representative Hallinan, I guess what I would say is I would refer you to pretty much the center column of this sheet. It says the estimated gross tax revenue from electric generation. For fossil fuels, that would be 89.3 million. And then after you subtract the total credit of 75, it would yield the net tax liability of the 14.2.
I'll let Representative Hallinan think about that one for a little bit.
Okay.
Representative Connolly,
Thank you, Mr. Chairman.
thank you. Did you want to hit your second question up?
No, thank you, Mr. Chairman. I'm fine for now.
All right, Representative Sweeney, go ahead.
Thank you, Mr. Chairman. So, Dean, great work. I'm assuming all your assumptions came off of your September 18th version 3 2019 memo.
Temte?
Mr. Chairman, Representative Sweeney, my recollection of that memo was actually trying to point out all of the electrical generation taxes in other states. Now, it did include Wyoming, and it did talk about the current wind generation tax in Wyoming, but the bulk of that memo was really a discussion of the current electrical generation taxes in place in other states.
So,
Go ahead.
thank you, Mr. Chairman. So, to that though, Dean, it's my recollection in looking back at that Idaho's wind, solar, and geothermal generation tax is kind of in lieu of other taxes. And so in fairness, in the comparison that we're making on what Idaho's doing on kind of a gross receipts tax, and I think is it my recollection also the wind is treated at a different rate than wind, solar, and geothermal. Is wind taxed at 3% versus 3.5.
Mr. Temte, if you know.
Mr. Chairman, Representative Sweeney, I will have to go back and look at that memo to confirm my answer to that. However, I would say this though, I do recollect that a lot of the power generation taxes in other states are in lieu of other taxes in lieu of property taxes or sales taxes like that. I will go back and look at that memo specifically for Idaho and let you know.
Also, Mr. Temtu, so it's 3% in Idaho, and you've listed 4 different percentage rates. Does any state go up to a 5%? Do you know?
Mr. Chairman, Chairman Zwanitzer, I will have to go back and look at that memo again for that answer as well.
All right, committee, other questions for Mr. Temte? I'm not seeing any
Chairman.
currently, so let me turn it over to Senator Case. Go ahead.
Well, Mr. Chairman, I think if you, I think Dr. Hallinan, his question was a good one. It kind of frames what happens here. If you look at the column in Mr. Temke's report that says estimated gross tax revenue from electric generation, that's kind of in the middle of the page. And you can see, for example, what this really is a reflection of the mix of how generation works in Wyoming. Fossil fuels right now, at this point in time, they're 87%. Of course, we all know that's changing, but that's why they get the fairly large tally for revenue. Almost 90 million would be assigned to them, but they also pay the biggest amount of other taxes. So that the credits for them are very, very powerful, so that the net tax burden on fossil fuels is actually less kind of than on others that don't pay so much. And so I think that's the real point. So when we talk about the electric generation tax rate on gross revenues being, that's before the credits, of course. But if you were to look at that number after the credits, you would see that basically it's kind of an equalizer about other tax burdens, and that because of the very powerful amount of taxes that fossil fuel contributes to the state, the mineral industry, they're not impacted quite so much. At least it's transitory, though. That's the state now. It's changing over time. This type of a tax and the analysis that Mr. Temke has produced shows that it will kind of self-correct over time as generation sources change and technology changes. And so, Mr. Temke, we could probably do a effective tax rate somehow with another column and show that it would hit different generation technologies differently. Couldn't we do something like that?
Mr. Tempe?
Mr. Chairman, Chairman Case, I'm glad you mentioned that. Actually, there is a column right on here, generation tax revenue per megawatt hour produced.
I see that.
If you look at fossil fuels, that's just under 39 cents compared to 11 cents for wind power. And then for the other categories, the generation tax revenue per megawatt hour is quite a bit higher just because of the absence of the other taxes paid. So I think that column goes a long way to describe the relative, what the different types of energy would be paying under this scenario. It's the third column from the right.
And Mr. Chairman,
Yeah.
I saw that, but we could express that as percentage, couldn't we?
Mr. Temte?
Mr. Chairman, I think we could.
Thank you so much. This is good work, Mr. Temke. And Mr. Chairman, I think this is really the relevant chart that Mr. Temke has produced. And this is, of course, based on the imposition of the tax based on gross revenues. And it also, if you just think for a second here, it's imposition of the tax with very generous credits for everything that you pay towards providing services in Wyoming. If you were to think about how powerful this would be, Mr. Temke, without those credits, wouldn't the number for if we didn't allow any credits at all, and it was just 5% off the top, wouldn't the revenues in the very center column reflect the total revenues? For example, 5% would take us up to 170 million, 171 million if we did not allow for those credits for taxpayers that are already paying substantial taxes in Wyoming.
You would agree with that, Mr. Temte?
Mr. Chairman, Chairman Case, Co-Chairman Zwanitzer, yes, I would agree with that.
So just,
Go ahead.
I don't know of any other tax that we've considered that is of the range of this magnitude with such a small impact on our citizenry when you really think about it. So I really appreciate the work, Mr. Temke. Thank you very much.
We talk about the impact of the citizenry, right? So there's an annual, the cost for the annual household, but there would be some belief that some costs may be passed on to the consumer through the utilities as well.
Well,
Mr. Senator Case?
Mr. Chairman, the way rate making works is that the utility through the Public Service Commission, of course, is going to, this will be a legitimate expense and it'll be worked through the rates, and they certainly will have the opportunity to earn that money and earn their rate of return and reimbursement for all expenses. What I've suggested earlier, and I'd like to get into this more at the appropriate time, is that because industrial customers are very unique in Wyoming, we have the most unique amount of industrial load, in fact, the largest load of any state. And this is really important. And electricity rates are very important to these industrial customers. By and large, they're natural resource based. They use a lot of electricity to produce the wealth that Wyoming has. Let's realize that. And so what I'm suggesting is this amount of load, which in Wyoming is north of 70% of the entire load. Now, when I was on the commission staff in Illinois, our industrial load was more like 20% or 18%. And so you were able to give more favorable rates to industrial customers because of that. But here, they're the most of the bulk of electricity consumption. So what I'm suggesting is, though, there's not that many of them. It's pretty easy for the Public Service Commission to think about rate making practices. And if we require the rates to reflect the credits for these industrial customers, it will reduce their impact and reduce their electricity costs substantially, as it should, but it will be based on the technologies that they choose. If they want to choose, and we have to allow them to sort of subscribe to different generation sources, not in reality, but with respect to rate-making purposes. We already see companies do this. For example, Microsoft subscribes to additional wind resources. Other companies could choose different technologies, and if they did, they should receive credit for the taxes that are already built into those technology choices. There's also an implication for bills that we've had in the past that called for coal-fired units to be actually put on the private block and potentially operated, and power exchange from privately owned power plants in Wyoming. We have one near Glen Rock that has been much in the news. Thinking about how those credits are established and the imposition of taxes on that within this model also is a good thing for that. It's favorable, but it's favorable only in the sense that they're already paying more taxes. And I think that's the bottom line key here. It kind of follows our Constitution, where it says if you put in an income tax, you have to realize the impact of taxpayers that are already, they have all their oars in the water. And you want to hit taxpayers that don't have their oars in the water, potential taxpayers. That's what this does. That's why I think it's got a lot of merit. I hope we consider moving it forward.
So real quick, Mr. Temte, just because I'm maybe confused. if Wyoming were to put in a corporate income tax or a gross receipts tax, would that have any effect on your chart? As we're already, charging minerals and fossil fuels at 100%. Does it matter? Could any of these electrical generation production entities deduct a gross receipts tax if one were to be implemented, or would that change your chart, or is that completely outside this conversation?
Mr. Chairman, Chairman Zwanitzer, I guess I would refer to the credits portion of the bill. It says each taxpayer is entitled to a credit against tax liability under this chapter for all excise, sales, use, severance, and ad valorem taxes paid in the tax year by the same taxpayer for any taxing authority in Wyoming. So if I think that particular language in the bill would be the driver as to what credits could be subtracted.
Thank you. Representative Hallinan, you have a question?
Thank you, Mr. Chairman. Katie, would you put the graph back up on the chart on our TV, or on our screen, please? Okay. I see now the estimated gross tax revenue from electrical generation. I can see now how that is correct, the way that Mr. Temte has produced those numbers. So I retract my opinion about about his error. So I think he's correct. Thank you, Mr. Chairman.
Representative Sweeney, go ahead.
Dean, in looking at this, the way the bill is structured, would we really consider hydroelectricity as even a factor? Because the way the bill is structured, federal or state facilities, controlled facilities, the way I'm reading it, are exempt. And what limited knowledge I've got of our hydro facilities in the state, they're pretty much all federally controlled, maybe with the exception of Lower Valley Energy, that has a small service territory. But would you think that's generally correct?
Mr. Temte, go ahead.
Mr. Chairman, Representative Sweeney, I would point out the footnote 1 on this sheet. It does say hydroelectric facilities and their transmission providers are both federally owned and may not be taxable.
Okay. Thank you. I appreciate that.
Mr. Chairman.
Senator Case.
Well, Mr. Chairman, I think we probably ought to think about that a little bit. I certainly concur that the hydro facilities themselves are, in general, federally owned. And but when a utility that falls under this tax sells electricity, they would be subject to the tax, and there would be that electricity, even if it started out as hydro, when it's sold by a private utility. Rocky Mountain Power has hydro resources that are sold. But if it's hydro produced in Wyoming that's sold, then it would be subject to the tax. And some of it's wouldn't, it's not who owns the facility. It's if it's sold by a Wyoming utility that comes under this tax. The gross receipts imposition is on the receipts of the utility.
Okay, Representative Hallinan, do you have a question?
No, thank you, Mr. Chairman.
Could I, Mr. Chairman, a follow-up?
Sweeney, go ahead.
Thank you, Mr. Chairman. So, in your opinion, the bill is structured that way?
Was that to Senator Case, Representative Sweeney,
Yeah.
or Mr. Tempe?
Yes, Mr. Chairman.
Senator Case, go ahead.
Mr. Chairman, so if utility A sells electricity
Mhm.
and gets revenue, the tax will be imposed. It doesn't matter where that electricity is produced. So if it's hydro that's then resold by the utility, and utilities pay for that hydro, even from federal, they're lower in the priority. Privately owned utilities are much lower in the priority than others, but they do have some. Now, do they have any from Wyoming? I'm not sure they do, but and so that part may be moved. But if there was a Wyoming hydroelectric plant owned by the government that provided power to a privately owned electric utility that sold that electricity to its customers and collected rates, indeed, it would receive the tax. And it should.
All right, Representative Connolly, next question.
Thank you, Mr. Chairman. Okay, so it is time for my question, my second question. So Mr. Temte, I want to go to the third column from the right, the generation tax revenue per megawatt hour produced, and just look at the difference between the 3% and the 3.5%. And I want to compare fossil fuels with wind. And just to make sure that I'm understanding it correctly, and then a question. So at 3%, the generation tax revenue per megawatt hour for fossil fuels is about 38 cents. When you go to 3.5%, it's 79 cents, so a little bit more than double. When you look at wind, the generation tax revenue at 3% is 11 cents. And when you go to 3.5%, it's 52%. So it goes from double for fossil fuels to 5 times, almost 5 times increase with wind. Is that a correct interpretation of just reading the chart to start with?
Mr. Temte.
Mr. Chairman, Representative Connolly, I believe it is.
Okay, so we're going from double for one source to 5 times for another, which seems, well, it's not equal, that's for sure. And then I'm curious if in any of those REMI studies that we have had done in the past, if there has been an analysis of that kind of jump in taxation to one particular industry. And so in particular with wind, that it would go up 5 times by simply moving it from 3 to 3.5%, for example.
Mr. Temte.
Mr. Chairman, Representative Connolly, I guess I don't recall any specific REMI study that tried to address that specific question.
Yeah, thank you, Mr. Chairman. And that's what I thought too. And I was just trying to find it and I didn't. And I must admit, I am concerned about kind of looking at that five times jump, honestly, going on there without any kind of analysis of what it would mean for the industry. So thank you.
Okay. Further questions from anyone on the committee? Mr. Temte, Representative Sweeney, go ahead.
It's really not for Dean, so I'll wait.
For everyone, go ahead.
Is it okay for me to? So a couple of observations is, number one, say Rocky Mountain Pacific Corps service territory includes, I think it's either five states or 6 states within their service territory. And so when we're looking at this, don't those other public service commissions also have to be willing to accept these taxes? It's not as simple as Wyoming just pulling the trigger. Otherwise, if say I'm to understand Utah is watching what we're doing, and has already started to push back. And I don't know if that's true or not. I haven't been able to verify it, but I've heard that. And so I'm wondering how that in general works. And the other thing I'd like to point out is that once the utility sells, or once it's sold by the private utility, there's already a 6% sales tax, I believe, that's applied to the ratepayer. So, but my first question is to the issue of the other public service commissions in those other states, because I don't want this to fall back on just Wyoming instead of a tax that we think we're exporting. If somebody...
That's very fair. Anyone want to jump in with thoughts on that? Senator Case or Mr. Temte or Mr. Anderson? Senator Case, go ahead.
Mr. Chairman, so all the taxes that are authorized in Wyoming that go into the production of electricity are in essence like costs of the company. They are, folks from other states take coal-fired power from Wyoming. They're doing it. When I came down last night, the coal plants were screaming. They were really, and the severance taxes are ultimately paid in the price of coal, and the ad valorem taxes. They're all recoverable costs to the utility, even in other states. There's a bit of a tricky thing going on. There's something called the Multi-State Compact, which talks about which states are recoverable from Wyoming's rates and which states, which rate costs are recoverable from other states' rates. It's very important that we impose a fair tax that treats Wyoming people equally to out-of-state people, to make sure that we indeed, through the Multi-State Compact, can, that is what's called a cost that's assignable to the system. And so indeed, but I think this tax achieves it because we treat people in Wyoming just like we treat other people in other states. Now, the credits are unique. They are unique, but they also are appropriate, I think, because they recognize that in Wyoming, we have an unbalanced tax structure and that some taxpayers pay more than others. It seems perfectly appropriate to recognize that. And that means that customers in other states, should they choose, they'll get the benefit of that, should they choose particular technologies as well. We have the unique ability, I think, to go one step farther with respect to our industrial customers and let them subscribe to the type of generation that they would possibly like to have for tax purposes only. I don't mean an actual subscription. We're not there yet that open up the markets, but an allocation based on the taxes. Other states could decide to do the same thing. I don't think they probably would, but they could. So I think it meets the test of between the states, and I think Representative Sweeney is wrong on this. Thank you, Mr. Chairman.
Okay. Any other comment on this bill draft committee before we move to the next one? Questions on the numbers, on the tax rate? The statutory language is pretty straightforward. If the bill gets moved and we discuss it, we will discuss obviously what rate should be put in the bill. And maybe during public comment, Mr. Temte could provide the handout from last year or 2 years ago on the other states who impose this tax and what it is. I seem to remember I've seen it before, but I don't remember it in the meeting materials for this meeting. But if you could find that in the next hour or so, I would be appreciative. Seeing any other comments specifically from the committee on this bill before we move to the next bill draft? I'm not seeing any.
Mr. Chairman?
I heard a Mr. Chairman, but I'm not seeing anyone talking. Oh, Mr. Temte, go ahead.
Mr. Chairman, The only thing I would say in addition, Representative Henderson put a question in the chat.
Yes.
Would it be possible, please, to include total property tax payments by energy source? I'm afraid based on the data that I used in this, for this analysis, I used the assessed valuations provided for electric companies. And then applied an average mill levy for non-mineral taxpayers to come up with that estimate. So I do not know the split by energy source for that question. And Mr. Chairman, I will look for that memo you are referring to and email it to the committee.
I certainly appreciate that. All right, with that committee, let us move on to 21 LSO Draft 134, Version 4, Wind Energy Production Tax. I mean, it's statutorily, it's a simpler bill to understand. Representative Hallinan, I know this was a request of yours. Would you like to explain the bill, or I can have LSO kind of walk through the statutory construction at your pleasure?
Thank you, Mr. Chairman. I guess I could go through it. It's pretty simple. The title on it is an act relating to the tax on production of energy from wind resources, increasing the tax rate, providing for distribution of the tax, repealing the 3-year tax exemption on energy production, and providing for an effective date. That really says the whole of the bill. Page number 2 says that on line 3, a $1 on each megawatt hour or portion thereof, which is produced in this state. That means the tax rate would be as follows. Then under distribution, it says that the proceeds from the tax imposed shall be distributed by the department as follows. The proceeds from the tax imposed shall be deposited in the state general fund, all of it. Then section number 3 or section number 2, that repeals the 3-year tax exemption for wind generated power. And section 3 just states that. Section 4 says that the effective date is July 1, 2021. And that is the bill, Mr. Chairman.
Any questions from the committee on the statutory construction? Representative Sweeney, go ahead.
Sorry, Mr. Chair. So Representative Hallinan, other than, is this in addition to the existing $1 per megawatt? The way I understand it, I understand the exemption portion, but the way I'm reading it, in addition, is this an additional $1, just to be clear, on page 2, double I, in addition to the tax under paragraph I of this subsection, $1 on each megawatt hour, so it's a total of 2?
I'll just double check with Josh. Would that be a correct statement in your understanding, Mr. Anderson?
Yes, Mr. Chairman. So this is a second dollar, a total of 2, and then the distribution of that dollar is to the general fund. The distribution of the existing $1 is unchanged. So what's reflected in the bill is just the distribution of the new $1.
Thank you,
And then
Mr. Chairman.
just checking for either from Josh or Dean, is there a fiscal note that we have readily available on what that 1 cent we believe would equate to based on the current 1 cent?
Mr. Chairman, Chairman Swanitzer, I emailed 2 documents to the committee. The first one was the one we just discussed on the electrical generation tax. The second document is related to the $1 increase in the wind generation tax and the repeal of the exemption. So I believe the answer to your question is in that second document that I sent yesterday that I believe I will be going over today. Katie is just showing it right here.
Excellent. Well, I guess while it's up on the screen, if you wouldn't mind walking us through it real fast, Mr. Temte.
Mr. Chairman, I would be happy to. This document really is split into three different sections, if you will. The top section is an estimate of the value of the 3-year exemption on electricity from wind power. And I would start by saying, Mr. Chairman, this 3-year exemption can vary quite a bit as far as the value of it. For example, for power produced in 2019, which we were discussing on the previous bill, and paid the $1 generation tax paid to the Department of Revenue. For that particular year, based on the EIA data I looked at and the megawatt hours reported to the Department of Revenue, the total megawatt hours generated and the amount subject to the $1 tax were very close to each other, meaning the value of the exemption for wind power produced in 2019, subject to a tax in fiscal year 2020, that exemption was nearly zero. However, this particular chart is describing the estimate of the value of that 3-year exemption going forward based on power that is anticipated to be generated from projects that will start generating wind power in the near future, beginning in calendar year 2021 and in the future after that. And the information in that top tier is largely based on the wind projects that have been permitted by the Wyoming Department of Environmental Quality Industrial Siting Division. And that data also being verified with the Department of Revenue as well. This estimate was kind of a joint project by LSO Budget Fiscal and the Department of Revenue. The Department of Revenue is very informed on these issues because of the impact assistance payments that are generated from projects of this type. And just starting from at the top, in the top tier of this spreadsheet, and the first column, it says nameplate megawatt capacity. This is the capacity of the megawatt capacity of wind projects that are being constructed now in the state. Now, it's a pretty long horizon. As you see, it's from calendar year 21 to calendar year 29, but that is the total nameplate megawatt capacity for the projects currently under construction. The column next to that is just taking that megawatt capacity and multiplying by 24 hours times 365 days to come up with an annual megawatt capacity. From that annual megawatt capacity, I am then applying a capacity factor of 32.1%. And this capacity factor is based on EIA data as well. In order to come up with an estimated annual megawatts produced from these projects currently under construction. Since the current tax is $1, the estimated amount of that exemption is also the same as the estimated annual number of megawatts produced, the roughly 15 million. The estimated total amount of the exemption, since it is a 3-year exemption, is that number times 3 to arrive at an estimated total amount of the exemption of $45.1 million. And then from there, I split out this total amount into the calendar year that the exemption would be applying to, based on the anticipated dates that these wind projects under construction will start producing wind power. And those range from, and that's the remainder of that top section, going from calendar year 21 all the way out to calendar year 2029. Mr. Chairman, I can continue to talk about the estimate of the $1 megawatt hour tax increase, or I can stop for questions at this time.
So again, with the screen share committee, if you do have a question, please use the raise hand function. But since I'm not seeing anyone currently, Mr. Temte, oh, Representative Sweeney, go ahead.
Thank you, Mr. Chairman. So, Dean, in this, you're not considering if the legislation moved forward and we had a grandfather in of any of these quote unquote permitted projects at all. This is a straightforward look at no grandfathering. As an example, Cedar Springs, outside of north of Douglas, is projected to come online in 21. So you have factored that into what this might look at.
Would that be correct, Mr. Temte?
Mr. Chairman, Representative Sweeney, I guess I would describe the top portion of this as just an estimate of the 3-year exemption as it currently exists in statute, without any attempt to try to grandfather anything in. This is just purely an estimate of the value of the current exemption in place over this time period.
Okay, thank you. Thank you, Mr. Chairman.
Welcome. Not seeing any other questions from the committee. Go ahead, Mr. Temte, if you'd like to talk about the 3-year exemption removal.
Mr. Chairman, if there's no more questions in regard to the estimate of the 3-year exemption, I would move down to the center part of this sheet, which is an estimate of a $1 megawatt hour tax increase as of July 1, 2021, based on current and future wind capacity from permitted projects. First of all, in the first column, 2019 megawatt capacity, that 1486 is another number that I found in the EIA data. Coincidentally, that 1486 is almost the exact same number that the Department of Revenue had reported to them for the current generation tax for 2019. And that's why I said that for 2019 anyway, virtually all of the megawatt production from wind was subject to the $1 tax. The calculations are pretty much the same as the upper portion, where I am coming up with an annual megawatt capacity of 13 million, a little over 13 million, by taking that megawatt capacity times 24 hours times 365 days. And then the next column, estimated annual megawatts produced, the 4178 is multiplying that annual megawatt capacity by the capacity factor I used up above, the 32.1%, which was an average of the capacity factors for calendar years 2017 through 2019, based on the EIA data. If you move on, as I mentioned, estimated annual amount of exemption. As I said, the current megawatt capacity it is all subject to tax. So those next two columns are zeros. And then the next one, the next column is just taking that estimated annual megawatts produced times the additional $1. Now in calendar year 2021, that number is only 2.1 million instead of 4.2 million. And the reason for that is because this tax would go into effect in the middle of the calendar year. These taxes are reported to the Department of Revenue based on a calendar year basis. So that means for calendar year 2021, the power generated from January through June would not be subject to the increase, but the power generated after July 1 to the end of the year would be. So that's why that number is half the amount that you see in the rest of the columns based on the current megawatt capacity. The second row in this particular section is applying that new $1 increase based on the new generation that will be coming online from the above section, assuming that the exemption is not repealed. In other words, you will see in calendar year 2024 and fiscal year 2025 that 4.4 million is the same as you see as the value of the exemption for calendar year 2021 and fiscal year 2022. In other words, there's just a 3-year lag, if you will, for the current 3-year exemption. And then this center section, I'm just adding those numbers together to come up with an estimate of the impact by fiscal year. In fiscal year 2022, it would be 2.1 million. In calendar year 2022, fiscal year 2023, well, the next two actually would be 4.2 million. And then you see under fiscal year 2025, then you start seeing the impact of the projects coming online after the 3-year exemption period. And then again, these estimates are based on for calendar years 2021 through 2029, which correspond to the fiscal years for 2022 through 2030. Mr. Chairman, again, I can move on to the lower section or I can pause for questions.
Let me just make sure I understand something then, Mr. Temte. We were taking the capacity at maximum based on nameplate of what it can produce. And then right now for these estimates, we're using the 2019 capacity factor of 32.1%. I guess my question is, does that, and maybe you don't know the answer, does that get audited or insured of what was actually produced, not what was capable of being produced? Or how does that number change drastically from year to year? Or are we pretty much a 32% capacity? I don't know if you can answer that, or maybe a later public comment certainly could for me. But I just want to make sure we're getting our numbers as close to correct as possible. Based on how we're calculating this, is that the average windmill produces 32% of capacity. Is that my understanding generally correct there?
Mr. Chairman, Chairman Zwanitzer, actually that 32.1% is a 3-year average of calendar years 2017 through 2019. And that's a capacity factor number that, again, I found generated by the EIA. This is based on EIA data. Now, those numbers certainly can change from year to year. Now, in 2017 to 2019, there was very little variance in what that number looked like. But if you look at prior years, it can change from year to year. But again, that is based on information from the Energy Information Administration.
So with technology changes as well over time, our capacity factor could be increased. I don't know, Mr. Noble, are you still on the line? Is there an audit? It's a self-reporting, I'm assuming, from the corporation of their production capacity. And if you could quickly walk me through how we ensure we're getting what we're charging.
Mr. Chairman, Dan Noble, Director of the Department of Revenue. What we typically receive from the producers themselves is the actual production that they generated, not necessarily their capacity factors. That's something that I think is captured in EIA data, but and Dean is actually using that for estimating purposes as to what percentage of the nameplate capacity that is on a wind farm is actually used to produce electricity. There's a number of factors that will affect the capacity factor. The actual weather itself can affect it. You have to shut down turbines when the wind exceeds a certain mile per hour, and you shut them down if you don't have enough wind as well. Also, maintenance, those types of things will play into how much the turbines are spinning and load. So the capacity factor itself is not something that we would audit. Probably the thing that we would audit is what they state that their annual production of electricity was.
Is it fair to ask if it's close to the 32.1% in Wyoming? I mean, is the EIA data generally on target, or is it wildly off, I guess is my question. Are these revenue projections in your mind consistent with what's been coming in?
Mr. Chairman, to tell you the truth, I think there's probably going to be some people in the audience that could probably speak more intelligently to the capacity factor itself. The numbers that are reported to us are not associated with a capacity factor. And when you consider what that number is giving you, that's going to vary by wind farm and its location. There are some that will probably have higher capacity factors than that, and there are probably some wind farms that are lower than that as well, depending on where they're located in the state. So I think it is something that you can probably get some better information from the folks that are the experts on wind energy out there. What we receive from the industry itself is their actual production from year to year.
Okay, thank you very much. Are there other questions for Mr. Temte regarding this chart? Representative Hallen, go ahead first.
Thank you, Mr. Chairman. I have a question on the graph number 2 for the tax year of 2028. It shows that the amount of tax with the $1 increase would be $6,600,000. But on the other, up at the top, when you have the 3-year delays, 3 years previous to 2027 or 2028, 2024, 2025, it shows only $2,200,000. So I wondered how come there's a difference between the $2,200,000 and the $6,600,000. Thank you, Mr. Chairman.
Sure, if you can, Mr. Temte.
Mr. Chairman, Representative Hallinan, actually, that's a great question. And it highlights this point, though, that included in that 2028 number is the 4.4 million of the new generation that will be coming online or anticipated in calendar year 2021. It also includes the roughly 800,000 that will come online in calendar year 2022. And then added to that, it includes the 1.4 million, which is assumed to come online in calendar year 2024. So it will be a cumulative effect, if you will, and not just merely the value of the 3-year exemption, but it is assumed that the 4.4 million that will come online in 2021 will stay at that 4.4 million into the future and then get added to as other projects come online as well.
Thank you, Mr. Chairman.
Mhm.
And Mr. Temte.
Representative Roscoe, did you have a question? Go ahead.
Thank you, Mr. Chairman. Mr. Temke, I just have a clarification for me. Is there a difference between, or what is the difference between a permitted project and a project that's under construction? Thank you.
Go ahead if you know, Mr. Temte.
Mr. Chairman, Representative Roscoe, it is my understanding of the process is that companies need to submit an application to the Industrial Siting Commission. And then they have to receive a permit from the Industrial Siting Commission, and then construction can start after that. Now, I will say this though, these numbers are based on the construction that is actually, that it's our understanding will take place based on best information available at this time from the Industrial Siting Commission and also from the Department of Revenue, because the Department of Revenue also starts to see impact assistance payments related to these projects that are under construction.
Okay, are there further questions? Did I answer your question enough, Representative Roscoe? Good.
Thank you, Mr. Chairman. Yeah, and I think maybe I was just concerned about something that might be permitted, but if some of our decisions today affect the power purchase agreements, maybe so the actual construction may or may not happen. And I think maybe that'll be answered with public comment. Thank you, Mr. Chairman.
Thank you. Are there other comments from the committee? I'm searching through cameras as quick as I can. Representative Sweeney, go ahead.
Thank you, Mr. Chairman. So back to Representative Roscoe's question, just to clarify that for me, Dean, if I could, just because it's permitted doesn't necessarily take into consideration if it'll get built. But your assumption here is that these are permitted projects. And I mean, you've got to have a baseline to go off of, obviously. And so, but you're not considering, will it get built? You know, so am I understanding that correctly?
Is that fair, Mr. Temte?
Mr. Chairman, Representative Sweeney, that's a good question, and I will say this. There have been a project or two that did submit an application and did receive a permit. However, based on the information from the Industrial Siting Division and also from the Department of Revenue, we can tell that construction is not moving forward. And those particular projects are not included in this estimate. These are only permitted projects that we know are currently going forward.
Okay. Any other questions on that chart? Not seeing any at this time. Any other questions for Josh or Dean or Representative Hallinan regarding the legislation before us? Not seeing any. So committee, go ahead, Senator Case. While you're thinking about your discussion, my intention is after We wrap up internal comment. We will take a 10-minute break, then have public comment for an hour. I'll try to do a back and forth between people here in Cheyenne and on the Zoom and try to notify you in advance that you're up next. But with that, Senator Case, go ahead.
Well, Mr. Chairman, in terms of statutory construction and the fact that we are an interim committee, so we have a little bit more flexibility, I'd like to ask Dr. Hallinan and maybe staff if this bill could be amended to impose the tax under the same conditions on solar facilities. And if we could have that as a possible amendment for later in our discussion.
Is that a question of Josh? Is
I'm
that
not sure, Mr. Chairman.
achievable, or you'll think
Yeah.
about that, staff?
I think it's achievable, Mr. Chairman, but I don't know if Dr. Hallinan has thought about it, kind of like his chance to weigh in too. Thank you, Mr. Chairman.
Representative Hallinan, if you want to respond or if you want to think about it over the break, that's certainly acceptable.
Mr. Chairman, I really haven't given this a whole lot of thought. I have no objection to it if that's the will of the committee.
Okay. I
Thank
would
you,
just
Mr.
guess
Chairman.
Senator Case may offer something at the appropriate time then.
It is doable, isn't it, Josh? Thank you, Mr. Chairman.
Yes, Mr. Chairman, I believe there's been bills in the past that have attempted to amend that or at least looked at that. And so certainly mechanically we can do it if that's the direction of the committee.
Thank you, Mr. Chairman. Thank you, Josh.
Okay, with that committee, not seeing any other comments at this time, let's take we'll say 10-minute break, but we'll come back at 10:15 and start doing public comment for anyone in the waiting room or who has expressed that they want to be involved in public comment. I will try to notify the first 3 or 4 of you on the order, and then we'll just go. You are welcome to testify about either bill, both bills at the same time, et cetera. So it'll be kind of the one overall chance for public comment on either of the bill drafts. And then we'll do that probably until about 11:15, 11:30, come back and decide if there's any will from the committee to discuss or amend either bill before us. So seeing no questions on that from the committee, let's take a 10-minute break. Reminder to turn off your video and your camera, and see you back here at 10:15. All right, committee. We're going to take public comment. I think first up will be Commissioner Malm, who's joining us virtually. And then here in our Cheyenne, we have the mayor of our community. Ms. Orr will be up on deck after Commissioner Malm. So we'll wait for Commissioner Malm's audio to kick in. And when it does, the floor will be his. Welcome, Commissioner. Maybe Mr. Malm, you're still on mute. I'm trying, you're trying. There you go.
Awesome. Thank you, Mr. Chair, committee. Just wanted to speak in opposition of the second bill dealing with the removal of the exemption and the increase in the production tax. In terms of revenue, because that's what this committee is about, obviously these projects already generate a substantial amount of revenue for local governments that we are able to utilize and pay for many of the unfunded mandates that are handed down from the legislative body. As state funds continue to decrease, I really don't see that these mandates are going to decrease in any way. And so we will struggle and continue to look for ways to pay for programs in public health, criminal justice, the courts, Title 25, indigent burials, Parents Council, County Extension Office, just to name a few. And so the more we can do to support the expansion and continued production of wind power in our state, I think is probably, we should do everything that we can to support that. I feel that continuing to go down this road and change rules on companies is also unfair. I think that we need to start playing and looking at the long game instead of continually chasing revenues through different extraction industries and really just always playing catch up. And so I would support a much broader based revenue source, whether it be property tax expansions or something like that, but continuing to pick individual industries and chase revenues this way, I think is doesn't get us anywhere in the long term. So thank you.
Thank you. Questions for Commissioner Malm? Not seeing it at this time. Thank you very much, Commissioner. Next up here in person, we have Mayor of our fine city, and we'll make sure, I think when you turn the mic on, Mayor, the camera will automatically focus on you. I'm hoping.
All right, I think I've got the green light. Thank you, Mr. Chairman, Mr. Co-Chairman, Marion Orr. I'm the mayor of the city of Cheyenne, at least for the next couple of weeks. I really want to echo Commissioner Malm's sentiment as far as being in opposition to these, and I'll share with you some real numbers as far as what it means not only for my community, Cheyenne, Laramie County, but also the state of Wyoming. And you know, here in Laramie County, we've been really fortunate to have a wind farm come online. It's been up and going, and again, I'll share with you some of those numbers. But it's been really great to be able to create our own destiny as far as that particular project. There were some turbines that were really not in good view, and working very closely with the company, we were able to take them offline. And again, working with the company, came to a mutually acceptable situation where they're producing what they need to produce, and we're still able to protect some really important view shed for that. And you know, when we talk about imposing taxes and regulations like this, and it being such a statewide effort, I can't help but think we don't like it when the federal government does that to us. And speaking for local governments, we kind of see that as being the same situation, where the state is essentially charting our destiny for us by making us not competitive. And so, again, just really, really urge the committee to consider that. These companies are making significant investments into our communities and our state, as Commissioner Malm alluded to. And so I'll tell you what we saw here in Cheyenne, and it totally saved the day in these COVID times. we projected a 25% revenue decrease when we did our budget. We are sitting at an over 20% increase year to date. In September alone, we had an 82% increase in sales and use tax revenue from September of 2019. So those are just a little bit of the figures, but specifically to the dollar. So as you all know with this committee, that the power generation supply, and this is from our city treasurer, the industry code is comprised of electric power generation facilities, which does include wind energy. And so from July through September of 2019 to July, September of 2020, there was $2.6 million more in sales tax received in this category just for the city of Cheyenne. $2.6 million over that time, just for the city of Cheyenne. So that is 2% of the 6%, which means the state of Wyoming got 4% of that. So our cities, towns, and counties throughout the state benefited from Cheyenne's wind project. That's fantastic. I've always said to my counterparts, a strong Cheyenne is a strong county and a strong state. When it comes down to the electric goods and merchant wholesalers, so this is the industry code that is comprised of the establishments primarily engaged in the merchant wholesale distribution of the electrical construction materials. So the wiring, the supplies, the light bulbs, and this category is where we saw that huge increase in September. This is how big it was. So from September of 2019, we had an increase of 54,200, and 2019, 10 million. $10 million above September of last year. Again, that's just our 2%. The state of Wyoming saw an additional huge bump. Mm-hmm. And I can tell you, our direct distribution for the city of Cheyenne is just over $4 million. That $10 million really saves us when it comes to local funding, as Commissioner Malm again alluded to. You know, when we're looking at, again, all of these unfunded mandates, how do we do it? So essentially, that is how we do it. And we also enter into long-term contracts. We have a 30-year lease agreement for the Belvoir Wind Project. We estimate $1 million a year from that. Now, that was a contract that we entered into with specific numbers and projections. And so now we're going to change the game. We're going to change the pieces on the game that we're playing with them. How fair is that? And what does that signal to other businesses that are looking at coming in? But again, we're just kind of at the whim of, as Commissioner Mulligan said, new taxation schemes to kind of make up for what we haven't been doing in the past. So really appreciate the opportunity to speak with you. I'm happy to answer any questions from you or any of the other committee members. Really want to thank them all for all of their work and their public service.
And I think those of us in the Laramie County community and Cheyenne specifically, without Frontier Days revenue this year, for what we thought the impact would be to our community, pleasantly surprised. Many people actually, even on some of the online social media, still can't believe that our revenues are up after everything with COVID, but it really is due to the wind in our community. Representative Hallinan has a question.
Thank you, Mr. Chairman. Madam Mayor, are you aware that in the next 9 years, on the second bill that we discussed, $24,800,000 would be made available to the local communities from this tax increase? Thank you, Madam Chairman.
Mayor Orr, if you'd like to
Mr. Chairman.
Yeah, thank you. Thank you, Mr. Representative Hallinan. Yeah, that's if they decide to come here. And that's if they decide to actually, pull the permits and do the work. They could very easily choose to go to Oklahoma or other, New Mexico. They don't have to come here.
Okay. Thanks. Other questions? Senator Case.
Mr. Chairman, thank you. Mr. Chairman, Madam Mayor, welcome. It's good to see you. The $1 million that you mentioned, is that because you're a landowner, or the city's a landowner, and and they receive that fee?
Mr. Chairman, through you, Senator Case, yes, that's absolutely correct. We do own the land. It's just east of town, and that is a lease agreement for the land that we have.
Thank you very much, Madam Mayor. We have heard from other landowners we'll probably hear from today. I think landowners in Wyoming are doing relatively well with wind development, and God bless them for that. They're getting a piece of the action. I don't think the state's doing well enough. Let's talk about that revenue that you mentioned. Was that from the sales tax?
That was from the
Madam Mayor.
sales and use tax to actually get them up and going. And so it's a one-time bump. I mean, we don't expect to see that obviously consistently, but then trust me, I'll take $10 million to spread, over a few years, take care of some other infrastructure needs that we have. But we do have more sustainable, again, that lease agreement, for 30 years. And then, the production of everything once it is online. But yeah, that's a big bump.
Senator Case, go ahead.
Thank you, Mr. Chairman. So unfortunately, you don't get the sales tax revenue every year. It's kind of an upfront deal for something that has a very, very long-term impact. But I do commend the city of Cheyenne because they have lease revenues to match the long-term impact that the rest of the people of Wyoming don't really get. I think the size of that lease payment indicates how valuable that position is for that company to be able to produce power and go and deliver it. So kudos to the city of Cheyenne for taking advantage of that. Unfortunately, I think that's something that's out of that the rest of the people of Wyoming aren't able to do unless we do increase some taxes.
Wouldn't you agree, Madam Mayor?
Mr. Chairman, I would agree, but I would also circle back to the fact that Cheyenne received $10 million with that one-time bump. My counterparts throughout the state saw additional because that's only the 2% on the 6% sales tax. And so that goes into your general fund.
Mr. Chairman.
Follow-up question. Yep, Senator Case.
Yeah, it's a powerful bunch of revenue. I wish in Wyoming we actually imposed sales taxes on more services so that the legal fees and the surveying and all the other things would be included in that taxes. But I think it indicates how valuable that location is. And unlike Oklahoma, they can't go to Oklahoma because it's in a different grid. So I could say kudos to you, Madam Mayor, for negotiating that and things. But I wonder if in 30 years, when your constituents, your former constituents, will be looking at those blinking lights, do you think they'll be really happy that we got that $10 million up front and didn't get anything else much over time?
Madam Mayor, if you want to comment.
Mr. Chairman, yes.
That's a question.
Okay.
It is a question. I would appreciate answering that. And I believe that there are other mechanisms other than taxing corporations out of doing business in Wyoming. For instance, Albany County decided that they didn't want a wind farm. And so the State Board of Land Commissioners rejected the project. That's how local communities drive those decisions. That's the local control. That's how you do it. You don't do it through taxation. It's just like sin taxes, in my opinion. Do we try to tax it so much that people don't do it? Well, sometimes it works, sometimes it doesn't. But there are other mechanisms for communities, including, again, the State Land Board of Commissioners to X projects.
I would be correct. There is bonding and reclamation for when the life cycle of the project's done for, we feel adequate protections in place for the companies to take them out or replace them and renegotiate a contract for another however many years wind is with us.
Right, Mr. Chairman, that's absolutely what we made sure was in the contract as far as that reclamation when the project's done.
Thanks.
So did
Yep.
you, just on the State Land Board, so they approved your project but didn't approve the one in Laramie? Is that what I understand you're saying?
Madam Mayor?
Mr. Chairman, Mr. Co-Chairman, that is true.
The Land Board did?
No, our community
Oh,
was not in opposition. Much more different than Albany County. I mean, you can argue either way. I mean, the viewshed was much more different than what we have on I-80 and again, the view pollution, as I know that it's been thought of in the past, those there was a lot of, and I guess I just watched it from afar. There was a lot of controversy And that makes it probably really hard for a corporation to come in, because I know that they like to be good partners and they want to be welcomed. But no, the State Board of Land Commissioners did reject that project in Albany County.
Okay. Any further
Madam Mayor.
questions for the mayor? Representative Sweeney?
All right, thank you.
Oh, Representative Sweeney has a question for you.
Another one. Oh,
Mhm.
Thank you, Mr. Chairman. Mayor, thanks for your testimony today. Do you think we're trying to replace the coal revenues on taxation with wind? In your opinion, can we even ever come close to those kind of revenues, in your opinion, having been on the other side of this?
Mayor, if you want to comment.
thank you. Mr. Chairman, Representative Sweeney, from where I sit, that's exactly what I see, not only from a local government perspective, but throughout my over 20 years working with the Wyoming State Legislature and everyone. I mean, I was lobbying back during Tax Reform 2000. And I'll tell you, there were many days when I felt like it was Groundhog Day from some of those same discussions. And having grown up in Casper, as you well know, Representative Sweeney, yes, we've obviously been very dependent on the extraction industry. And unfortunately, I think we have a reputation in this state of looking at the next big shiny object and trying to tax it instead of taking a larger scope and look at our overall taxation system. It's not sustainable. I didn't realize that again until becoming mayor, as far as our tax base is so incredibly low. My personal taxes, my property tax, my sales tax is so incredibly low that I'm not paying for my police. I'm not paying for my fire. I'm not paying for my potholes to be replaced. We just don't have those kind of funds. So, I honestly, and I guess I get to say this because I'm an outgoing mayor and I'm not running for reelection. We need to raise personal taxes. We need to be able to pay our way. And unfortunately, the legislature has continued to kick that can down the road for over 20, 25 years. I mean, 4% state sales tax? Seriously. Lodging tax, when you travel, I'm astounded at how little I pay for the services that I receive. And here in Cheyenne, we're growing like gangbusters. It's wonderful. But guess what? We can't afford to. So that's my long answer to that question.
A lot of great things about living in Wyoming. And I did just want to reiterate, we have property taxes on those wind mills that will, for 30 years, at least be paying some continuous benefit into this county and city because it's on city land.
Correct, Mr. Chairman, you are correct with that.
You have a follow-up as well, Representative Sweeney?
Thank you, Mr. Chairman. In more of a, I just, as outgoing mayor, want to thank you for your steadfast work with the legislature and being willing to take on tough issues. I think you've done a great job for the citizens of Cheyenne and other municipalities around the state. So with your voice. So appreciate that. And thank you, Mr. Chairman.
Thank you, Representative Sweeney.
Thank you. Thank you.
All right.
Next up will be Ms. Delancey with the Wyoming Business Alliance. She's joining us now. Welcome, Cindy.
Good morning, Mr. Chairman and members of the committee. My name is Cindy Delancey. I'm the president and CEO of the Wyoming Business Alliance. And before I offer my testimony to you, I just wanted to thank you for the opportunity to Zoom in today and wish you all a very, very nice and restful and peaceful holiday season. So looking forward to spending some time with family, limited family, but all the more I hope you're able to enjoy the same. So moving on to my comments today, Mr. Chairman, the Wyoming Business Alliance comes to you today to express opposition for both of these bills. Ironically, the timing of your discussion, I think, warrants a further discussion related to the oil and gas federal public land study that was just released by Dr. Timothy Considine with the University of Wyoming. We've not heard from any of our wind project proponents yet today, but the best way to predict the future is to look at the past. And when I reflect on the 15 or so times that these topics have come before this and other committees, I anticipate that many of the wind developers will come out in strong opposition to the contents of some of these bill drafts. So operating under that assumption, I just wanted to call to your attention that, that the results of that study are pretty eye-popping. I've shared the link of the study with you, Mr. Chairman, as I think that this is really a topic for this revenue committee. And I would hope that one day we'll see a presentation from Dr. Considine to you as far as federal policy around access to federal public lands continues to evolve in the future. But if there is a departure, meaning a moratorium on federal leasing or a preclusion on federal leasing, the financial impacts to Wyoming, which apparently in this study that we would be the hardest hit in result to these policy changes, are in the billions of dollars as far as our overall revenue picture. I also want to say that that is a very eye-popping figure, but I believe it's probably larger than that when you factor in the potential impacts to agriculture as well as the tourism and hospitality industry if there are changes on federal public lands policy. So my point in raising that to you, Mr. Chairman and committee members, is we're at a time when the future looks very, very uncertain as far as where our traditional revenue sources have come from. And knowing that there's a very fragile and unstable ability to continue to gain revenue from the traditional sources that we've been so blessed for decades and generations to receive, it just doesn't feel right to me and the members of the Business Alliance to enact such large sweeping policy changes on an industry that's trying to grow and emerge here in Wyoming. My point is that I think we're going to need every nickel that we can have. And I know from past testimony from developers speaking about changes to our current tax structure, that knowing the sensitivity of the margins and the returns on these projects, any slight adjustment or disruption, let alone the sweeping changes that are being contemplated by this committee today, can potentially kill any future for this industry in Wyoming. I don't think that the producers mean to say that as a threat to you or any members of the legislature. I think it's just a harsh reality, knowing the competitive nature of this business. So I would ask that this committee keep those very, very sensitive margins in consideration as you look for additional revenue, because if the projects don't come, not only do we lose the numbers on the tables that were reviewed earlier, we also lose those numbers that the mayor and Commissioner Malm spoke about, in addition to all the jobs and I believe it's called Tier 1 multipliers for the value add to all the ancillary businesses that benefit from these projects as well. For example, our restaurateurs, our hoteliers, our people that own the tire shops, our plumbers, our electricians, our car dealers, our realtors, all of those types of ancillary business go away too if these projects don't come. Having lived for a significant period of time in Carbon County, seeing the benefit from these projects and knowing that there's future projects on the horizon that will be helping small communities in Eastern Carbon County like Medicine Bow, Saratoga, the significant impact to those communities and the small businesses that benefit as a result of this growing and emerging area of our economy is undeniable. And so I'll just conclude by encouraging you to take a look at Dr. Considine's study. I think that backdrop is incredibly important for you as Revenue Committee members. I don't envy the challenges that you have, but looking at additional increases and changing the rules of the game on projects that are in the pipeline doesn't feel as a way to be attracting new business to our state, when I think we have other avenues that we can be pursuing to try to look at curing some of our revenue deficiencies. So with that, Mr. Chairman, again, I wish you all a very happy holiday season, and I'm happy to entertain any questions. Thank you.
Thank you very much, Ms. Delancey. Is there any questions for Cindy or the Wyoming Business Alliance? Representative Connolly, go ahead.
Thank you, Mr. Chairman, and thank you, Ms. Delancey. Thank you for being here, and happy holidays to you as well. I'm curious if the Business Alliance has come up with or made a determination about which taxation sources that it would support increasing.
Ms. Delancey, go ahead.
Thank you, Madam Chair, or thank you, Mr. Chairman and Representative Conley. Our policies and guiding principles support legislation that is conducive in helping business grow. We've been on record and we're instrumental in helping getting the fuel tax passed, last year getting the lodging tax passed. We're very, very open to looking at revenue sources that make sense. We do not feel that the wind energy proposals as presented are good for Wyoming and will help develop business. We feel it'll inhibit business. So that's why we're not supportive of this. We are supportive at looking at any other avenue that this committee or the legislature comes up with as a potential source of revenue. We're very excited to hear about the presentation from Mr. Fleming at your last meeting as far as a vehicle and avenue with some modernization to our investment statutes as a potential source of income generation there. I was also a member of the Government Efficiency Commission, and after sitting through hours of meetings, reading thousands of documents, I'm hopeful that one day the legislature will act upon some of the recommendations for savings and efficiencies that were highlighted through that work as well. So I think there's more avenues to get to the root of your question, Representative Conley. The Business Alliance does support all additional avenues to get that revenue generated without killing an industry at the same time.
Mr. Chairman, follow up?
Yep, go ahead.
Thank you. Thank you, Ms. Delancey. Yeah, I am kind of familiar with that broad kind of discussion that you've had, but I am curious, what I'm hearing often, at least coming from the emails, for example, is that targeting one particular industry right now when we really are in trouble is your message. The corollary to that is sometimes, what we need instead is an increase in sales tax, or we need to consider, personal or corporate income taxes. Those are broader based. So I am curious, we have a revenue shortfall right now, and are those kind of broader based taxes like sales tax or income taxes something that the Business Alliance has looked at and will support, for example?
Ms. Delancey, if you'd like to comment.
Thank you, Mr. Chairman and Representative Conley. Absolutely, we are open to looking at anything. I would like to echo the comments of our Madam Mayor in the sense that, businesses would like to see, my members would like to see more personal responsibility in private citizens paying their way in Wyoming to contribute to the enormous amount of governmental services that virtually we pay nothing for. When we look at increasing taxes that the majority of our industrial and business customers pay on our behalf, essentially all we're doing is deepening our dependence on those industries instead of looking for ways to broaden our tax base. Some examples of personal responsibility, if you will, type taxes that could be contemplated, yet we are not seeing is, implementing the sales tax back on food. I know you'll be discussing some of your, beer taxes, cigarette taxes, I don't know very many corporations that buy beer and cigarettes. So those are examples of a way, from a policy perspective for individuals to start shouldering some more of the individual services that we, as Wyoming citizens, have enjoyed for years for basically no or little investment from our own personal wallets. So I deeply understand your question. This is the question of the day. It's one that this committee has struggled with for years. The Business Alliance looks forward to being part of the solutions, but I think those solutions require a much larger discussion besides raise taxes or not. I think back to Senator Beitman's comments maybe 2 meetings ago about trying to look at diversification efforts and ways to, again, broaden that tax base as opposed to just voting up or down bills that come before this committee that many of you have seen multiple times. So again, we come to the table with ideas. We're happy to help. You know, as I said, I'm happy to serve on any committee to try to find these discussions and represent the voice of the business community, but doubling down our dependence by asking businesses and corporations to continue to contribute to Wyoming's overall economy at a time when people are working very, very hard just to make payroll, you know, feels a little difficult right now. So happy to be part of the discussion going forward. Representative Conley, thank you.
All right, thank you, Ms. Delancey. With that committee, thank you very much, Business Alliance. We'll move on to our next presenter, Mr. Darren from Wind Energy. There you are. Hi.
Yes, good
Welcome.
morning, Mr. Chairman. Can you see me and hear me okay?
Certainly can.
Sorry for the bright light in the back. Always trying to adjust this Zoom stuff. Mr. Chairman and members of the committee, my name is Tom Darren, and I'm Western State Affairs Director for the American Wind Energy Association. We're the largest trade association for wind manufacturers and developers in the country. We have at least 10 developers who are trying to build projects in Wyoming and bring more revenue like we're talking about today. I want to thank you for the opportunity to provide comment, and like Ms. Delancey and I'm sure everyone else, to everyone a very peaceful and restful and safe holiday season. A few quick points. Existing wind projects in Wyoming bring in millions each year currently from about the 1,500 megawatts we have in the ground now in 3 different tax revenue streams to the state. Those are wind excise taxes, that's the $1 per megawatt hour, and property taxes, in addition to the sales and use tax that Mayor Orr spoke about. Chairman Zwanitzer, I'm glad that you clarified that it's not just the sales and use tax, but it's property taxes and sales and use taxes that extend into the 20, 25, 30-year life of our projects that we bring in each and every year, in addition to that upfront sales and use tax big bump. The question, in our opinion, today for this committee is, what is the best way to position Wyoming to expand its renewable energy markets to keep these benefits coming? And because the answer is staying competitive on pricing in the Western energy market, and because a permitted project, thank you, Representative Sweeney, does not necessarily mean a built project, and I'll elaborate on that in a second. AWEA opposes both bills today because they would either increase the taxes on wind, add new taxes, or both, and all of those would make us less competitive and less able to build our projects and bring in those revenue. Mr. Chairman, with your permission, I'd like to try, if I can do a little technology twist here and share my screen to show one slide.
We'll certainly see if we can do that for you. Katie, if you can also try that.
Mr. Chairman, he has permission to screen share at the chairman's will.
Thank you, Mr. Chairman. Thank you, Katie. I'm hitting screen share, going over to, is that working?
Yes, it is, Mr. Darren.
Is it large enough? A lot of times I have to put on my glasses to see what other people's screen share with me. Can you see that this is a public service company, or Xcel of Colorado, and their electric resource plan?
I think,
or should I enlarge it?
It's on the big screen, Mr. Darren, but it's good on the little screens. I think it's okay. It's really pretty good.
Okay, thank you for that. Sometimes you just never know. I just clipped out the title page of the document, so you see that this is at the Public Utility Commission of Colorado from late December of 2017. And this is just a summary of bids that went in to an all-source bid from Xcel Energy. And they received hundreds of bids, but on the winds and from different technologies. But of course, we're talking about wind. So I want to keep it apples to apples. Back in late 2017, you can see they're highlighted at the bottom, and please, folks, let me know if you can, I could enlarge this. 96 wind bids came in from a combined number of projects that year, and the median price was $18.10 per megawatt hour. Now, of course, by definition, that means 40 or more, technically 43 of those projects, their pricing was less at the wholesale price of less than $18. So we know intuitively that The market price out there in Colorado, Wyoming, neighboring states is $16, $17 per megawatt hour. And this, by the way, was late 2017. So I hope everybody can see that. Right now, we have many wind projects in Wyoming that have completed the State Industrial Siting Act process. And if they are built over the project's lifetimes, they will provide $10 billion in new investment, thousands of new jobs, and combined, again, over the lifetime of the projects, $1.5 billion in those three separate tax revenue streams we bring to the state. That would be new sales and use tax, property tax, and wind excise taxes. And here's why that $18 per megawatt hour, or just right about there, is so critical, because again, permitted projects do not equate to built, and I'll explain why. Most projects in the West will not get built without a long-term contract or a power purchase agreement. Our companies cannot go out there and get the hundreds of millions in finance to build these projects without a commitment for someone, usually a utility, to offtake that power. Before signing these power purchase agreements, or PPAs, if you will, utilities send out requests for proposals, or RFPs. They're often regional in nature. So Wyoming Wind competes against New Mexico Wind, Nevada Solar. You can think of other examples. Utilities generally pick a short list after their RFPs goes out of about 2 or 3 of these 200 megawatt projects or so. That's about their appetite for 3-5 years on the horizon. So right off the bat, they're picking 2 or 3 winners out of 100 or so bids, meaning 97% of those projects are winnowed out. They will not get into the end zone. They will not get built. So keep that in mind. And when states levy new taxes, the cost of those taxes is reflected in the higher bid price, and that affects the bid price they have to put into that RFP competitive process. And it makes it harder to win that PPA and harder to build your project. And a quick reminder, a project that doesn't compete well does not win a PPA, period. No PPA equals no project. No project equals none of those revenue streams. Dr. Gabi informed us back in his 2019 analysis that Wyoming already has a high tax burden per megawatt hour on the state taxation side compared to New Mexico and other Western states, in direct competition with Wyoming and my companies that want to build projects here. Not just permit projects here, but build them. A quick example from the LSO spreadsheets. From the 3.5 gross revenue tax scenario, they would take Dr. Gabi's findings and make them worse for Wyoming in terms of getting a chance to tap into those new markets in the Western region. Wind taxes, if you look at the columns, would grow from $2.32 per megawatt hour, that's current, under the 3.5% scenario, to $2.83 per megawatt hour. That's a 21% tax hike on wind right there. That's just in the 3.5% scenario. I'm sure it would be others if we play them out. We pay our fair share. The same tables that you showed today show currently fossil at $2.03 per megawatt hour. And I can, in question and answers, I can show you with the columns where I pulled that from. Summing it up, increasing our taxes with these low regional prices where the market, not legislators, pick winners and losers, may well be the tipping point with a winning project. And most importantly, the revenue and the jobs go to a neighboring state, not staying here in Wyoming. This is truly a case where a higher tax rate might seem attractive at first blush, but please listen to me and to the developers and others that will follow me today. But if it kills the projects from getting built because we aren't competitive, we don't win that PPA, then the result is less and not more revenue. So with that, I really appreciate the opportunity to comment, and I'm happy to field any questions.
Thank you. Going back to Chair, any questions from the committee? Mr. Darren, I'm not seeing any this time. Thank you very much for being here today, Tom, and appreciate that presentation as always.
Thank you, Mr. Chairman.
Next up, we're going to go to Mr. Merrill from the Equality State Policy Center. Welcome, Chris.
Thank you, Mr. Chairman. I'm Chris Merrill, Executive Director of the Equality State Policy Center. I'm here today not because my organization is convinced that this proposed tax increase on wind energy is great policy, because we're not. There are differing opinions within my coalition about the wisdom of this proposal, and at least one of our member groups opposes it. I'm here because the Equality State Policy Center is deeply concerned about Wyoming's current and projected budget crisis and the dangers that these shortfalls pose for Wyoming's economy and quality of life, and especially what they could mean for the future of education funding in the state. Public schools, along with access to healthcare, are part of the essential foundation of any viable community in Wyoming. And if this legislature doesn't start addressing our budget shortfalls with new sources of revenue, many of our local communities are going to be in big trouble, and very soon. From my perspective, Mr. Chairman, it's unfortunate that this type of tax on industry, like the ad valorem mill levy you'll be considering later, might be the only politically feasible kinds of new taxes at the moment, given what what appears to be an overwhelming sentiment in the Wyoming State Legislature against new sources of revenue. And I say this is unfortunate because if Wyoming is to remain economically viable, if we want to foster and maintain a high quality of life for our residents, and if we want to become a place where future generations will want to live, we'll all have to pay a little more in taxes. We'll all have to chip in our fair share, and we'll have to work together to make that happen. The people of Wyoming will have to do this, not the energy industry. We'll need to work together to pull ourselves out of this developing nation-style resource trap we're caught in. Here we are, entering the third decade of the 21st century, and we still count on the energy industry and mining industries to pay almost all the bills. So in this sense, this legislation before you right now is more of the same. Governor Gordon is now proposing a budget with what he termed devastating cuts. That's roughly $1 billion smaller than the one the state passed just 2 years ago. And even after all these painful cuts, the state's still facing severe budget shortfalls in the years to come, which, if left unaddressed, would inevitably require cuts to education and other institutions essential to our future. Unless, that is, the state legislature can summon the political will to finally modernize our tax structure and come up with new, diversified, and more reliable revenue streams. So after considering this proposed wind tax legislation before you, we ask that you please reconsider more meaningful revenue measures to address our projected budget shortfalls and help set the state on a course for a brighter future. These include a modest and fair income tax along the lines of what we see in Utah, Idaho, Nebraska, Montana, Colorado. An income tax is the most basic way a state can ensure that everyone who has the means pitches in a little bit according to their means. And Wyoming can no longer afford to be, and nor should it want to be, a no-fee tax shelter for the wealthiest people on planet Earth. This committee has heard testimony from regular working Wyoming people that they'd be willing to pitch in and pay more taxes to help cover the cost of education and other essential services. So we implore you to reconsider that. We also ask that you reconsider increasing the property taxes and also implementing a modest real estate transfer tax. Before I conclude, Mr. Chairman, I need to note that in my written comments, I articulated some admittedly tepid support for this bill. I need to withdraw that support today. I've learned that my coalition is not unanimously supportive like they are for the taxes I just mentioned. So thank you for considering these comments and recommendations.
Certainly appreciate it. Any questions from Mr. Merrill or the ESPC? Seeing none at this time. Thank you very much, Chris. Next up was going to be the Wyoming Stock Growers, but I'm not sure if he must have stepped away. So we're going to go to Mr. Cox from Rocky Mountain Power. John, welcome to the Revenue Committee. Floor is yours.
Thank you, Mr. Chair. My comments, I'll try not to repeat anything that was said before, but I'm happy to stand for questions. A few points I wanted to highlight, perhaps are commonsensical, but I still think it's important. First of all, as a company, we have communicated concerns about the challenging economics with some of our coal plants. And as a result of that, we've been involved in quite a few of these discussions before legislative committees, concerns about our analysis. I was in a committee just yesterday talking about an investigation of our integrated resource plan by the Public Service Commission. So setting all of that aside, I think that we can all agree that certainly adding a tax to those coal plants, even with some tax credits to offset some of that does make the economics even harder to sustain for those coal plants that we have in the state. And to be clear, much of the focus has been on some nearer term closures that are expected by our company. The earliest is Jim Bridger 1 at the end of 2023. But many of our coal plants will extend far beyond that. Even just the Jim Bridger example, Unit 2 is expected to run through the end of 2028, Unit 3 and 4 through the end of 2037, et cetera. So my point there is adding a tax beyond what is already currently being paid by those facilities certainly makes it more difficult. A second point, this particular proposal that I'm talking about right now does not include the same sort of taxation on self-generation. And so in that process, the legislature would be creating an uneven playing field, a situation where Rocky Mountain Power and other utilities become more and more tax collectors for the state for things used beyond just the delivery of electricity to our customers, while other customers that choose to provide their own electricity would not be subject to that same sort of tax burden. And we believe that to be problematic. A third point, this is related to a comment made by Senator Case before. We certainly do have today, under our multi-state protocol, a system where much of Wyoming electricity is exported to other states. That is absolutely accurate. Wyoming is an energy exporter, and under our current plan today, they would continue to be that. I would say, though, that in these conversations that we continue to have with Wyoming and with other states in which we serve, there is discussion about perhaps changing that model. And Senator Case alluded to sort of a subscription model where each state would choose its own generation source rather than pooling or sharing those resources amongst the states. Again, that's not how we currently do it. But in states where we serve, where interests are varied and changing, that very well could occur. And certainly Wyoming could choose to pursue more thermal generation as part of its generation mix, while other states might pursue other sources of generation. I point that out just to remind folks that in that type of scenario, the idea of simply exporting all of these taxes to other states becomes a little bit more difficult. And it's a different kind of conversation. And so I just want to be clear that much of the analysis today has been focused on how things currently operate, but that assumes sort of a static future. And I think, as we all know, the energy market is rapidly evolving. And as such, I think it's just important to flag things that may or may not change in the future, depending on the interests of our various states, including, I would say, probably first and foremost on that particular issue, the state of Wyoming. Finally, I'll just say this, as it relates to wind taxation proposals, Rocky Mountain Power, we are in the middle of an all-source RFP for projects throughout the states that we serve and states where we have transmission. And you'll recall in our integrated resource plan, we did call for additional wind generation and other sources of generation, but wind specific to Wyoming and new transmission associated with that. The purpose of the RFP is to find out what the lowest cost resource is, irrespective of that plan. So essentially what we're doing is we're testing the market to say, those were our planning assumptions, set them aside. Now let's focus on what the market will actually bid into this. And again, I emphasize the phrase all source RFP. We're not saying it has to only be certain resources. It can certainly be any resource. So this discussion of taxation is certainly timely. We've been in these conversations over multiple years with the state of Wyoming. So certainly if the state of Wyoming proceeds, that does provide clarity to us as it relates to that RFP and future potential resource decisions. But in the absence of that, we do sort of struggle to figure out what that energy future might look like for Wyoming. We know what the rules of the game are today. We certainly would welcome clarity on what those rules would look like in the years to come. With that, Mr. Chair, I would stand for any questions.
Thank you very much, Mr. Cox. Senator Case, I think may have a question for you.
Thank you very much, Mr. Chairman. And Mr. Cox, very good to see you. Thank you for your testimony. I want to be clear with you about the subscription model. I'm not advocating a subscription model. I believe that there was a bill proposed by Senator Hicks a few years ago that actually sort of did that, and was sort of a reverse renewable portfolio standard for Wyoming. And we all know that bill didn't get anywhere. I'm a great supporter of an integrated 6-state electrical system with integrated resource plans that include renewable energy, and increasingly so. And so the subscription I'm talking about is only with respect to the tax burden. It's not to affect the planning or the resource decisions of the company in any aspect at all. It'd only be with how we collect the tax. And we would recognize collection of the tax from, we'd recognize the tax is already paid on the resource. So I hope that clears it up. It's not meant to force the company into having a different set of resources for Wyoming versus other states, and change the future path of Wyoming. Now, Mr. Chairman, I'm pointing this out. I do point out there was another bill that came through the legislature that allowed for these coal plants to be stood up privately. I don't know if that'll ever go anywhere. I wasn't really a big advocate of all that. And I just point out that this sort of accommodates that, but it doesn't encourage that. So, Mr. Cox, I appreciate your company, and I hope you appreciate, I'm not asking you to change your resource mix in response to this.
Mr. Cox, any comments?
Yeah, thank you, Mr. Chair and Mr. Co-Chair. And I certainly hear your comments in the spirit with which it's intended. I would say to the full committee and to the chair, Senator Case has been an active participant in that 6-state process, the multi-state protocol, the most active of any legislator in our 6 states. And so he is certainly well versed in those issues, more than most anyone, including in the state of Wyoming. One thing I would just add in addition to that comment, Senator Case, was you are absolutely correct that the state of Wyoming has not passed legislation that you had mentioned that had been sponsored in a previous session that would require a certain level of thermal generation. But the legislature did pass one bill this session, HB 200, sponsored by the chair, that would require a certain amount of generation from essentially carbon capture. And that's the amount of that generation that would be required is still a matter to be determined by the Public Service Commission. So the legislature did not direct a certain percentage, but rather allowed the PSC to do that. I would say the legislature did also direct a cap on the amount of customer costs that could be used to pay for that. In this case, 2% of a customer's bill. The original bill said $1 billion. That was amended down to 2%. For full transparency to the committee, 2% for Rocky Mountain customers in Wyoming amounts to between $12 and $15 million a year. And so in that case, you can kind of get a feel for the type or the amount of infrastructure that could be built out, as we have this conversation. But to your point, Senator Case, I hear you, and I appreciate the sentiment.
Mr. Chairman, just to be clear, the chairman that Mr. Cox was referring to is yourself, Chairman Zawanaser, that was a sponsor on that bill. I was not a sponsor on that bill. I didn't really support that bill. So, but two different things. So thank you very much, Mr. Cox. Appreciate that.
It was a great bill. I think we can all agree. Thanks. And with that, thank you very much, Rocky Mountain Power and Mr. Cox. Representative Sweeney, you have a question?
Yes, thank you, Mr. Chairman. John, thanks for your testimony, and we appreciate Rocky Mountain Power. My question is directed, and I kind of brought it up earlier. I just like to hear your response in relationship to Utah's Public Service Commission. If the draft bill 345 moved forward, how can we assure that effect on other states within Rocky Mountain Power's grid in service territories, would they not have to, in some way, agree to whatever taxation we put on? Because won't that, in general, affect all of your customers in those other states? If I understand that correctly.
Mr. Cox, go ahead.
Yeah, thank you, Mr. Chair and Representative Sweeney. Yeah, that's correct. So, yeah, and you had mentioned, I believe in your previous comment, Representative Sweeney, that other states are watching. I think you specifically mentioned Utah. You said you hadn't been able to verify that. I'm happy to verify that for you here today. That yes, they are watching. I mentioned the investigation we've been going through in the state of Wyoming. We've been going through not maybe a similar process or identical process, but we submit an IRP as well to the other states in which we serve. And so in this case, we submitted one to Utah. The response we got back from the state of Utah said, hey, we appreciate these points, but our chief concern is that we don't feel like you've fully quantified the risk of Wyoming wind taxes. And that potentially, in this case, we were looking to build out new projects in the next 3 to 4 years in the state of Wyoming. And the response from the Utah Public Service Commission in that initial planning document or planning filing was that they are concerned and they're watching what's going on in the state of Wyoming. Now, clearly, Utah, just like any state, would love to build a resource within their own state, and so there's that piece of it. There's other interveners there that are encouraging that, but we've got to justify this as the lowest cost for our customers. We can do that today with Wyoming Wind, but obviously as taxes change, that can change that dynamic. And maybe just one more point on that, Representative Sweeney. I know it's been said before by some others that this is a great opportunity to export taxes to other states. And while that may be true, that much of our customer base is in another state, the inverse is also true. And so if it ever got to a point that Wyoming essentially, either through tax policy or through some other mechanism, did not want future generation in the state, we could certainly build generation in another state if it's the lowest cost option. And in that scenario, those tax dollars would be paid, by a small percentage, paid by Wyoming customers, just like they are in each of our states. So my point there is it works in both directions.
You have a follow-up, President Sweeney.
Thank you, Mr. Chairman. So thanks for clarifying that. And I'm curious if some of the other states are watching as closely as Utah, but one of my big concerns if this moves forward is Utah says, put the brakes on Rocky Mountain Power. If our ratepayers are going to be impacted directly by this additional $4 per household per year, then we don't want any part of that. Is there a possibility, and this is probably far-fetched, but I worry about it, is that our ratepayers, Wyoming, that 15% of the ratepayers that Rocky Mountain Power serves here out of your generation, is it possible that all of that burden falls back on our ratepayers only and not shared across your service district?
Or Mr. Cox, go ahead.
Yeah, thank you, Mr. Chair and Representative Sweeney. Certainly any state can challenge that. And I believe it was brought forward previously by a different member of the committee that there are differences between system costs and situs costs. So system would be costs associated with all of the states in which we serve. Situs would be just focused on just one state. In this case with generation, it is determined to be a system cost. If the state wanted to challenge that, they could certainly do so, just as Wyoming could challenge another state's taxation policy. I view it as probably unlikely, especially given the fact that there is an existing $1 megawatt hour tax already in place that wasn't challenged. But I would say the bigger concern is that future projects would just not be approved to be built. And either because the tax was too high or the risk of future taxation was such that other commissions did not approve generation to be built in the state of Wyoming.
Thank you. That's a little easier for me to understand. And thank you, Mr. Chairman.
Thank you, Sweeney. Seeing no further questions, Mr. Cox, thank you very much, Mr. Cox, for being with us today. Always appreciate it. Next up will be Mr. McGagna from the Wyoming Stock Growers. If you're on now, Jim.
I am on, Mr. Chairman.
Go ahead, Mr. McGagna.
And appreciate this opportunity to visit with the committee. I'm not sure if you're seeing the right video here, but I won't worry about that at this point. I've been having some problems with our system today. But Mr. Chairman, appreciate this. Jim McGagna with the Wyoming Stock Growers Association. And I'd like to begin by building on a comment that was made earlier today by Co-Chairman Case, that yes, there are numerous landowners, increasing number in Wyoming, who have benefited financially significant from wind energy development on their property. But I think we need to put that into a much broader context. If you look at the trends in ranching and agriculture in general in Wyoming and many other Western states, in particular in recent years, the historic pattern that we lived with through much of the 19th century was that if a ranch, either because it was no longer economically viable or for other personal reasons, was put up for sale, it was bought by the neighboring rancher. It led to the growth and expansion of some ranches in Wyoming, made them somewhat larger, more stable, more ability to withstand all of the uncertainties that we face in the ranching community. Over the past 20 years or more, that scenario has changed. The high land values on land in the West, particularly some of the more scenic ones, but really on any of them, has become such that the dollars derived from ranching no longer enable a rancher to buy out a neighbor's property and expand their operation. So those properties end up with one or two things happening to them. Either they end up becoming subdivisions, in which case we lose wildlife habitat, we lose open space, many of the things that are valuable to Wyoming, not only for us citizens who live here, but to our economy, to our tourism and recreation economy. Or those lands end up being sold to out-of-state interests who have the wealth to make purchases at those high market values. And in those cases, often the first thing we see is a no trespassing sign that goes up, and hunting and fishing opportunities become limited. So again, we lose many of the things that are so valuable to Wyoming. On the other hand, and there are concrete examples of that in the past few years, where wind energy development has enabled the landowner to not only bring stability to their ranching operation, but to go out and acquire additional land and expand that operation and grow that economy. And those dollars in turn are being spent by those ranchers in Wyoming. They're citizens living in Wyoming. They're supporting our local communities. Their kids are in our local schools. And so they are indirectly contributing more dollars through sales tax, through property tax, to maintaining not only our economy in Wyoming, but the needs of our government in Wyoming. And so for those reasons, Mr. Chairman, our position is that we are strongly opposed to both of these measures presented today. We recognize and respect the challenges that the state faces in deriving some additional revenue sources. In fact, as one example, just this past week at our Winter Roundup Convention, our membership voted to support a 9-cent fuel tax increase, because those are dollars that are critically needed to maintain infrastructure in Wyoming. On a case-by-case basis, we will look at proposed other broad-based tax increases and determine whether those are the right type for Wyoming or whether they're in the right amount to meet the needs of Wyoming people. But targeted taxes that make it more difficult or discourage particular businesses who add to our economy, who add to the dollars that are available to support our agriculture community, are taxes that we simply cannot support. With that, Mr. Chairman, I would be happy to take any questions.
Thank you very much, Mr. Magagna. Any questions for the stock growers from the committee? Seeing none at this time, thank you very much. And I certainly enjoyed your convention last week in Casper. I know Representative Sweeney and I were there and appreciated the comments from your members and the good work you do. So keep up the good work.
Appreciated your participation, both of you.
Thank you. With that, welcome Mr. Esquivel from Engage to the Revenue Committee. Happy to have you this morning. If you can hear us, Mr. Esquivel, floor is yours.
Sorry, can you guys hear me?
Certainly can.
Okay. Yeah, again, my name's, thank you, Mr. Chair. My name's Dylan Esquivel. I'm with Engage. Engage is a group of younger individuals, 18 to 35 individuals in Wyoming, empowering next generations to advance and grow the economy. It's really our position for any industry to be allowed to be viable and to flourish in the state, especially an industry that has a route already paved basically to generate revenue for the state of Wyoming and generate revenue for itself and for its members, and continuing or adding another tax onto something like the wind industry or the energy industry maybe isn't necessarily the best way to go about allowing these industries to continue and to want to do business in the state of Wyoming. We want to ensure Wyoming is competitive and attractive and an attractive place that is welcoming to industry. Again, particularly ones that have direct impact because of market need and market desire. I mean, there's, as everyone's stated, Wyoming's a energy export state. There's a need, there's a desire for wind energy beyond Wyoming. And where Wyoming flourishes is our ability to meet market demand, meet market want and will, as you know, as coal was allowed in the 70s to meet the Clean Air Act. I mean, that's why the Powder River Basin blew up and done so well and has afforded us so many things in the state, afforded us so many schools, is because of the coal we have. We have the wind, we have the ability to take advantage of it, and there's market need out there that wants that electricity from that wind. So we should continue to try to be nimble and to take advantage of the market. We believe, you know, doing things in this manner and continuing to be smart, continuing to have industries that pay their way, that generate revenue for communities, for the counties, and for the state as a whole, in a reasonable manner is the proper way of doing this to further next generation's ability to take advantage and to have such a wonderful life in Wyoming. With that, I'll take any questions if anyone has one. If not, thank you, Mr. Chair.
Thank you, Mr. Esquivel. Anybody have any questions for Engage? Seeing none at this time, certainly appreciate your participation and the voice of the next generation of Wyomingites coming forward. Enjoy the rest of your day. Commissioner Grant, welcome to the Revenue Committee.
Good morning, Mr. Chairman and co-chair, members of the committee. Thank you for allowing me the opportunity to speak today. I come to you as a rancher. My name is Richard Grant. I ranch in southwest Converse County. I also have a portion of a wind farm located on our ranch. I'm also a commissioner of Converse County and have served that position for a little over 8 years now. I'd like to speak to you on both of the bills presented today. First one would be the bill on electrical generation tax. I would commend Mr. Tempty for the spreadsheet that he put together. Displays a lot of numbers, which a lot of us have not seen, the breakdown and what it costs for electrical generation on a megawatt hour, both from the fossil fuels through our renewables. And so that's helpful as we go through and make this determination. The problem I see in that, we are dealing with numbers that were presented in 2019. Having heard from Mr. Cox, Rocky Mountain Power, we know we have coal-fired electrical generation plants that will be decommissioned over the next several years, which greatly changes the outlook that this additional revenue would create for Wyoming. I think the complexity of trying to combine all of the sources to benefit Wyoming is a good thing. However, these numbers are not accurate, I don't think, for future use. I would recommend that the study be done and look at in closely with the Rocky Mountain Power's decision as to power plants that will close. I know we have to rely upon a steady stream of cheap renewable or some type of energy to replace what those coal-fired power plants get shut down. So I can't support the electrical generation at this time. However, I do think it's a topic that is very worthwhile in discussing and looking at where the future might need to be in this venue. The second one then would be the wind energy production tax. We again are back at the table on this. It is a touchy subject. We hear about this, it seems like every legislative session. We do hear a lot about how the $1 is either going to make or break a company to come to Wyoming. I do know that it is a fine line in this energy sector making these decisions. As you heard from the mayor of Laramie County, we too in Converse County are fortunate that we have a wind project being built and developed this summer in northern Converse County. Our tax revenue suffered great losses early on in the year, which were picked up by this new wind company bringing these turbines and the development to our county. We are held whole through this point in time. Without the development, we would certainly be in a bind like many others in this state. We are fortunate. We do have a wind source. We have some wind developed and some more planned. I do believe that with this extra additional burden on $1 added, given the level of what these power purchase agreements are in today's market, adds an extra level of questionable decisions whether or not these companies want to come to Wyoming. We saw a large dip in production and development of these when the first dollar came into play. Since that time, we've seen a dramatic decrease in what those power production agreements, power purchase agreements brought. And so now they have a plan put forth that they can develop and make these projects function and be profitable and pay the bills. And yet we come back again and want to add another dollar because we see some development. It's unfortunate that it's not unfortunate that we've seen a loss. It's unfortunate that we look to energy as our only source to help develop and maintain this revenue that we're losing in our fossil fuels. The future of fossil fuels, who knows where it's going to be in the next few years with the new administration, but certainly Wyoming needs to look to the futures and figure out a way to maintain our lifestyles. And I know as a landowner and a private property owner, my private property rights have the ability for me to do what I want on my land without harm to health and safety of the public. And that was part of our big decision that we went through as we developed the wind farm on our property. Comment was made earlier that the landowners are making out far better than the state. I would have to tend to disagree with that because we don't collect the sales tax, which is in the millions. We don't collect the property tax, which we pay a portion of that property tax as well as the wind farm. That all goes to the state and then is distributed throughout the state. We maintain a small income comparative to what the rest of the income is off of those wind farms. And that additional income helps us as a landowner to maintain our family lifestyles. It helps us to allow family members to come back. It helps us to increase and modernize our equipment and the things that we use to continue to develop the products in which we have and want to maintain as an agricultural operation. You heard from Mr. McGagnon, without the additional incomes, many of these family farms and ranches end up getting sold to developers, which then get subdivided into small ranchettes, urban type settings, which cause a increased demand on emergency services. By allowing a wind farm to be built on private property, it eliminates that increased need for emergency services. It allows us, a family-run operation, to maintain an agriculture base, which our whole goal in life is to help provide a food source and an income not just for myself, but my family, and feed the world. So it's a small part of the whole process that we need to look at, but I certainly think that the extra $1 would be an increased burden on the industry to try and figure out how to make this prosperous and be developed in Wyoming. With that, I'd stand for any questions. Thank you.
Thank you, Mr. Grant. Any questions from the committee? Representative Hallinan, go ahead.
Thank you, Mr. Chairman. Mr. Commissioner, how is the property tax divided between the windmill company and your ranch?
Commissioner Grant, you don't have to be specific, but if you can maybe be vague about such, you're welcome to.
Certainly, Mr. Chairman, Representative Hallinan. Our ranch pays the property tax for the ag base side of things. We pay 100% of that ag base. That small footprint that wind turbine sits on then gets sent to the Department of Revenue and is taxed based on what the assessed valuation is for that property sitting on that piece of land. So I can't give you the exact breakdown on it, but we do pay our ag base on the balance of the land outside of that footprint. I hope that answers your question, Mr. Allen, Representative Hallinan.
Thank you, Mr. Chairman.
Okay,
That
thank
does.
you. Seeing no further comment, thank you very much, Commissioner Grant, for being with us today. Certainly
Thank
appreciate
you for your
being
time
here.
today.
Thanks. Next up, Ms. Kirchhofer. Welcome to the Revenue Committee.
Hi, thank you. Can you hear me okay?
Yes, Ken.
Okay. Yeah, my name is Jennifer Kirchhofer and I live in Albany County at the I-80 Summit. I appreciate you letting me comment today. Committee members, I'm asking you to support the proposed legislation to raise the wind energy production tax and repeal the 3-year exemption to existing tax. Wyoming has a long history of taxing energy production. Wind power producers are no different. What is different is wind power projects have a huge destructive footprint in relation to the small amount of intermittent energy produced, bringing many negative impacts we must mitigate. These don't end when the project is built, but the sales tax and property tax revenues decline over time. We're sacrificing our Western character for short-term revenues based largely on sales tax without calculating the statewide economic losses from reductions in visitors from hunting and tourism. Winter habitat crucial to big game herds is carved up by these developments, which has a direct relation to hunting losses, either by newly imposed restrictions surrounding turbines or herd movements away from turbines. A newly released study on pronghorn winter resource selection before and after wind energy development in South Central Wyoming implicated pronghorn avoided wind turbines within their winter home ranges during the operational phase after development. Avoidance of wind turbines by pronghorn on the Dunlap Ranch was detected for 2 winters following construction, and there remains limited information on how ungulates respond to wind energy development over longer periods. Nonetheless, managers should expect some loss of otherwise functional habitat when siting wind energy projects in pronghorn winter range. The state deserves compensation for these losses. Will our landscape still attract visitors after being decimated by these enormous industrial wind projects? Can we even calculate the economic losses in tourism when Forever West is forever ruined? Why are we so willing to sacrifice our communities and our land for an inadequate product at a discount? Wind will never replace the tried and true efforts of promoting our best assets and attracting visitors and new residents into our communities for long-term economic sustainability. Wyoming tourism generated $1.6 billion in visitor spending in 2019. Visitors spent approximately $3.8 billion in 2018, and travel spending generates around $196 million in local and state tax revenue. Making Wyoming less attractive with industrial wind turbines will cause a reduction in this necessary and stable revenue. Increasing wind energy taxes will slow the influx, allowing Wyoming to regulate and properly site projects and lead to retention of income from residents and visitors. That's our long game. Why? Because people want to experience our Western character and see Wyoming's wildlife and natural landscapes up close and personal, unobstructed by the blight of wind turbines. And since I am from Albany County, in response to Mayor Orr's comments, yes, Albany County's voices were heard at the Office of State Lands, but that took 10 months and hundreds of citizens' efforts. It was a huge burden that we shouldn't have to bear on our own, and we felt very alone. We want help from the state. by increasing taxes and having projects cited more properly where they won't affect so many citizens. And I've also personally spoken with the people who now live under those roundhouse turbines in Cheyenne. They were in opposition. They feel like they were played. That land was initially going to be for public use, not wind turbines. The citizens who will be subjected to living near turbines want help to slow projects down. So we are taken into consideration. All counties are different, and every county has different rules and setbacks and noise restrictions. And we are feeling like in our county, we are not being heard, and our health and safety is at risk in an area where there's $64 million worth of assessed market value in land and homes. These are the people that we need to be looking after. The burden shouldn't be placed on these citizens. The burden should be placed on the wind companies to be making those payments. Thank you.
Thank you, Ms. Kirchhofer. Is there any questions? Jennifer? I'm not seeing any, but certainly appreciate you coming today. That was a significantly powerful testimony that we, Representative Hallinan, go ahead. Sorry, Tim, it's all you. Oh, but you're on mute right now.
Thank you, Mr. Chairman. Ms. Kirchhofer, how about the effect on birds? Have you given some consideration to that from these wind turbines?
Oh, absolutely. We have a lot. I live right up at the area. I live at the I-80 summit. We have golden eagles. We have endangered hawks. We have a wildlife preserve that's right on the other side of 287 that attracts these birds specifically and talks about it in their marketing literature. And that is why we're fighting so hard to save this area from the wind turbines, because this isn't just about money when you start taking away all of the things that are so great about Wyoming, our wildlife and our natural resources and, these endangered species and hawks and eagles that we do have in this area. People aren't going to want to come here anymore to live and to visit and tour and the hunting and everything. So yeah, absolutely. I've seen tons of eagles and hawks flying around the area of the proposed wind turbines, but it just somehow never seems to make it into those studies that are presented saying that they just really don't exist here, and they do.
Okay, thank you. Any further questions? Representative-elect Baker.
Thank you, Mr. Chairman. And this is just a follow-up on.
Just a little bit louder, please, Mark.
Thank you, Mr. Chairman. And this is just a follow-up on Representative Hallinan's question. Mrs. Kirchhoff, on the birds, do you have any data or anything that talks about the relation and the impact on mammals, specifically bats? Because I know that they're not classified as birds, and oftentimes that's overlooked as an impact. So do you have anything that or any information about that?
There is a lot of information out there, and I would love to be able to rattle that off on the top of my head, because that is one of the big major concerns that then the bats eat the bugs, and then the bugs, you need to start spraying for chemicals because now you have more bugs and less bats and all that stuff. So there is a lot of research out there, but unfortunately, I've had to, work on for the past 11 months now, just trying to save this area, and worked more on researching the natural resources and the land mammals and the hunting impacts and everything that are going to be happening in Albany County. So I haven't specifically looked into the bat situation here locally.
Thank you. Seeing no further comment, appreciate having you here today and joining the Revenue Committee for this important discussion. Next up, also, I think from Albany County, Ms. Brand. Oh, you're still on mute though. There you go. Nope, we still can't hear you, I don't think, right now.
Hello?
Oh.
Can you hear me?
Yes, now we can.
Yay, okay. I reached out to you as a concerned citizen on the 24th of August, and it was picked up in the Billings Gazette. And I'm reaching out again to you today in support of the wind energy production tax. I do so as a fourth-generation Wyoming businesswoman and resident in the poorest county in Wyoming, Albany County. As a 115-year-old photography business, my family has been in direct competition with photographers for that entire time who offer free photography. And I want to point out that my family has made the decision all those years to stay the course and charge appropriately for quality, consistency, and a lifetime guarantee. This has been our simple recipe, and it has worked. Human nature is human nature. Does Wyoming want to be free and taken advantage of by fly-by-night operations, pushy lobbyists, and profiteers at the expense of consistent long-term revenue? We as a state have a long history of taxing energy, and wind producers are no different. Many, in fact, are past producers in coal, oil, or gas, and they're familiar with taxation. Do we really want to let the inmates run the asylum? Wind projects have many impacts that we must mitigate. Our ecotourism industry saw over 2 million visitors this year. Wind projects rob much needed tourism money that Wyoming has been taking for granted for over 100 years. Do we want to lose this for short-term revenue? Wyoming has been subject to man camps and boom bust before. We must have a bigger vision. We must tax wind. Many Western states have a forward-thinking position on wind taxation. They are tired of pushy lobbyists and pushy developers. It seems we've gotten even pushier with COVID-19. Currently, only 1 in 4 wind projects has a buyer. And with those odds, we hear politicians and local government cry that developers will go elsewhere. I wish they would stop speaking on my behalf. The devastation in my husband Evan's business in our county will be dire, with 151 wind turbines, some that are maritime in height and will be just 150 feet shorter than Devil's Tower each. These turbines are slated to be up and constructed by the end of 2021. How will my husband recruit programmers and upper management for handle information technology with this eyesore right across from Medicine Bow National Forest, the most visited national forest in Wyoming this year, and directly across from Kurt Gowdy State Park, one of 2 of the most visited Wyoming state parks this year? I will no longer be able to create emotional portraits for affluent families who have built their $1.5 million homes directly in the path of this one project alone. They are the ones who support my local United Way in the poorest county in Wyoming. They have businesses, they employ, they help families build homes and live their entire lifetimes here and raise their families to come back to Wyoming or want to stay in Wyoming. Over 60% of my residents in my county live in the county, not in the city. Projects like this will directly affect their health and safety. Shame on those who believe we should keep the 3-year moratorium. We can't fall back to once what was a safe position of no taxation. Please, Wyoming, do not bury your heads in the sand. Let your vote be in favor for increasing wind energy tax. Send a strong message to people like me who are listening in. Do not give away our natural resources cheaply. Thank you for your time.
Thank you. Questions for Ms. Brand? I'm not seeing any currently, but certainly appreciate your time today and testifying before the committee, and wish you and your husband's businesses well in the economy we here are surviving in right now. So thank you very much, Ann.
Thank you.
Next up, Ms. True. Joanne, welcome to the Revenue Committee. Always happy to have you.
Thank you, Mr. Chair. My name is Joanne Skyme True, and I'm a resident of Casper, and I'm speaking today as a private citizen and as someone who has spent my career in the oil and gas industry. I submitted a letter to you all for the November 20th Joint Revenue Committee hearings, as I was unable to testify in person on that date. My letter spoke in general support of the wind and other renewable industries in Wyoming and against a punitive tax structure for these industries. That said, with respect to the 2 bills mentioned specifically today, I would like to speak in opposition to the second bill outright, the one dealing with an increase of per megawatt hour tax. I'm not a tax policy expert, but the first bill discussed appears to take a more strategic approach to taxes on wind and renewables, taxing energy generation as a percentage of revenue versus a per unit assessment. Much as oil and gas is taxed, not on a dollar per barrel charge, but on a percentage of revenue basis. I am not in the anti-tax or anti-broaden the tax base crowd, so I do not want to be viewed as giving testimony that is anti-tax on this specific industry or on any industry. I do, however, want to advocate for a strategic and competitive tax policy in general for the state and on wind and other renewables specifically, and not for tax policies that are punitive in nature. As others have already stated, we as a tax need to reduce our dependency on minerals for tax revenue and broaden our
Did I
tax.
make my point or did I ramble?
Oh, should I continue? Okay. As others have stated, we as a state need to reduce our dependency on minerals for tax revenue and broaden our tax base and look at new sources for revenue in the state. I would also echo the comments made previously by others who provided public comments that we as Wyoming citizens need to step up and look at the personal responsibility of covering taxes that fund the services that we all use personally. Thank you for the opportunity to testify today, and I would be happy to take any questions. Thank you, Mr. Chair.
Thank you, Ms. Game-True. Any questions from the committee? Not seeing any, but thank you for waiting and joining us and for your letter at the last meeting. I know I've read through it and talked to other committee members about it, so certainly happy for all the work you do. Enjoy the rest of your day.
Mr. Chair.
Thank you. Mr. Norris, welcome to the Revenue Committee. Floor is now yours. As soon as you unmute your microphone. Let me try it. How about now?
It looks like can you hear me?
Certainly, yeah.
Thank you. Chairman, co-chairman, committee, I appreciate the time to talk to you. I've talked to you before about this subject, the taxation. I'm here to oppose both bills. The bills are, I'm not here to describe how we should get the revenue for the state. I understand the state's in dire need of revenue. That's not my place. My place is to look for good jobs for the people of my local union. It's Local 800 of the operating engineers, which is 350 members. And many of these members work on the wind turbine projects. Without these wind turbine projects, these members will be going out of state and possibly moving out of state. If we continue to tax this industry out of business, we can look forward to that. If the committee would consider the amount of money each member of this local union makes and how much money they spend in the state of Wyoming and the revenue they get from that, the state of Wyoming gets from these members, I think you would consider these taxes inappropriate. Recently, I traveled from Wyoming to Houston, Texas to visit my daughter. On that route, I stayed in Trinidad, Colorado one night and happened to see a member of the local union down there, and he was working on a 1,800-acre solar farm. In New Mexico and Texas, there are many, many wind turbines being built and already built. We're losing that revenue. We're losing those jobs. If the committee would consider the corporations that try to build these wind turbines and how they have to look at Wyoming as an unstable environment, I think they would also understand that us doing this 3 to 4 times a year of proposing a new wind tax, these corporations will have to go someplace else. They can't stand to sit here and listen to another wind tax that they don't know if it's going to kill their project or not. There's a lot of money goes into these wind projects. Wyoming is unique in the way that we have to deal with these wind projects because our power goes out of the state. Now there's going to be some room on the transmission lines coming up as the power plants close. But they still have to consider how we have to get them out, and that's a cost to the developer. That's a cost to the power purchase agreement. So as we add these new taxes, if we add these new taxes, we're going to price ourselves out of an industry. This industry is what we need for Wyoming right now. I would ask the committee to think about, if we kill this industry, where will our young people work? Where will our established citizens work? Will we have to move out of state? Will we have to work out of state? So I'm here to oppose both of the new taxes proposed for the wind industry and the electrical generation tax. Thank you.
Thank you, Mr. Norris. Any comments from the committee or questions? Not seeing any at this time. Certainly appreciate your testimony. Next up, Ms. Wolstenholme. Welcome to the Revenue Committee.
Thank you, Mr. Chairman, and thank you to the committee for allowing me this opportunity to speak. My name is Karen Wolstenholme, and I'm here on behalf of Fowler Ranch, my family's ranch in Converse County, to express our opposition to any legislation that would threaten renewable energy development here in Wyoming. My ranch has been in my family for over 100 years and was homesteaded by my grandfather, who was progressive in his ranching methods and was one of the first in the county to actually harness the power of the wind to create a wind generator.
Hey, Ms. Wolstenholme.
Yes, I'm sorry.
Turn off the YouTube. I think that would help.
I'm very sorry. Okay.
Perfect. Go ahead.
Okay. As I said, my grandfather homesteaded over 100 years ago, and he was very progressive in his ranching methods, and in fact was one of the very first in the county of Converse to harness the power of the wind, put in a wind generator to provide electricity to his homestead. Fowler Ranch is part of the Cedar Springs Wind Project. We welcome NextEra and view it as the opportunity to expand our revenue stream and provide security for the next generation of Fowler Ranch. The number of family farms and ranches in Wyoming has actually declined in the last years. And this does provide an opportunity for renewable, non-pollutant energy, and it is important to us. As the economy and markets move to take advantage of this lower cost of renewables, wind and other renewable projects will be constructed. These proposed taxes are prohibitive to developing here in Wyoming. These projects will happen, and if it costs more to do that in Wyoming, then they simply won't be investing here in Wyoming, and the state and its citizens will not benefit as our neighboring states will. It is time for Wyoming to take the long-term view and diversify its economy. And I appreciate the opportunity to speak. Thank you very much.
Thank you as well. Any questions from Ms. Wolstenholme? I'm not seeing any, so appreciate your time today. Enjoy the rest of your Thursday out there.
Thank you.
Thank you. Next up, I was originally going to have Mr. Udell, but I don't see him yet. So with that, Mr. Taylor, go ahead. There you go.
Is that me, Mr. Chairman?
That is you, Mr. Taylor. Okay. Welcome.
All right. Thank you, members of the committee. My name is Sean Taylor, Executive Director of the Wyoming Rural Electric Association. Come today before in opposition to both bills, and I'll touch on both of them briefly and our opposition. And then I had a couple of questions that I might be able to ask Co-Chair Case just for some clarification. On the first bill, the broad generation tax bill, just running some back of the napkin numbers through Basin Electric, who is the majority owner of both the Laramie River Station and the Dry Fork Station. They came up with about a $12 million annual tax, but that did not take into account the tax credits. We weren't quite sure. There's some gray area there on how to figure that out. I guess our main concern is adding any cost to generation, whether it has a small impact on our members and their rates, but adding any cost to generation will start to disadvantage Wyoming generation from other states. And currently, the generation and transmission cooperatives, that's Basin Electric, Tri-State, and Deseret, are looking at joining a regional transmission organization. I know you've talked some about that in the past on some of your meetings and what RTOs are and what they mean. But in the context of this bill, an RTO, if we join an RTO, we kind of give up scheduling our own generation, and the regional transmission organization takes that over, and they schedule the least cost generation across that region, across that regional transmission organization. And so if we add costs through a generation tax to that, then we just continually disadvantage our Wyoming generation sources. So that's one point. I guess the question I had, one other point, and Mr. Cox with Rocky Mountain brought a really good point up that I hadn't thought of, and that was on self-generation. We've talked before, probably not so much the Revenue Committee, but before Corporations Committee in the past, what self-generation means, and basically takes load away from utilities, away from rural electric co-ops. So we're not a big fan of self-generation, but some industrials can do that now. However, if they were continue to look at self-generation because of the cost of wholesale generation due to an increase in taxes, and then they self-generate and then don't have the tax imposed upon them, that does definitely put the incumbents at an unfair advantage. So that's another reason we would oppose that first bill. On the second bill, the wind specific tax, I've stayed silent on that over the years because the co-ops do not have any renewable generation in the state of Wyoming. However, just 2 days ago, I was on a conference call and learned that Tri-State Generation and Transmission will be looking to put on an additional 500 megawatts of capacity over the next decade, and looking at Wyoming, but they did say a increase, whether they put up renewables or any type of fossil natural gas, any increase in the generation tax or an imposed generation tax will make that less attractive. And then two questions I had for Chairman Case, if I may, Mr. Chairman. Well, real quick, let me back up. One other concern we have is how do we impose the tax and the credit on power plants that are owned by multiple entities? For example, Laramie River Station is owned by Basin Electric, Tri-State G&T, some of the municipal utilities, and as I understand it, the legislature can't tax municipal utilities, so that burden wouldn't be shared with them as well. So how do we allocate the tax burden and the credits to multiple owners? We haven't quite figured that out yet. Senator Case brought up the point of the tax or the credit moving upstream. Dry Fork Power Plant is a good example. It is a mine mouth generation power plant, but they do not own the mine.
Just a minute.
And so who would get the tax burden, and then who would get the credit? Is it the third party that we purchase the coal from? And Senator Case touched on that a little bit. And finally, one other question I have, and it pertained to hydro. And I thought I heard Senator Case say that it doesn't matter where the electricity is produced, just where it was sold. So if a co-op bought hydro from out of state, and somebody, I believe maybe Representative Sweeney mentioned Lower Valley Energy, they get a lot of hydro from the Bonneville Power Authority, but then they sell it in state. So is it a generation tax or a generation sales tax? I guess I'm not quite clear on that. So with that, Mr. Chairman, again, urge your opposition to both of these bills. I know you guys are in a tough spot and turning everything over, but we just don't feel that this is probably the the proper way to handle it. So with that, I'd stand for any questions.
Thank you, Mr. Taylor. I don't know, Senator Case, if you wanted to respond to either of those points, you're certainly welcome to at this time. And if your mic's not on, but if not, well.
Well, Mr. Chairman, thank you very much.
Sure.
Mr. Chairman, there's several questions in there. I think the tax that we're really talking about here is on the gross receipts, the one that we had the modeling for. So it's a tax on the gross revenues of the sales. So it would apply to anyone that sells electricity. But the credits that would be allowed to come off of that would apply to the credits that are paid to the state. So in the case of a resource that's has multiple owners, each owner, if they made sales in Wyoming, then they would of course owe the tax, but they'd be able to deduct off they would take a credit on the other taxes that are paid, including, the bill's very specific about that, severance taxes, ad valorem mineral taxes, property taxes, excise taxes, and wind generation taxes. So the idea is that there is a tax imposed on the sale of electricity, but that the company gets to deduct everything that they also pay, or that the upstream fuel supplier pays. We're explicit about that in the bill because, as Mr. Taylor knows, lots of the Peabody might mine the coal, but it might be sold to Rocky Mountain Power, for example, or something like that. With regards to the self-generation, I think Mr. Taylor's correct in that if a entity were to exclusively self-generate and not sell power back on the grid or sell power under power purchase agreement or any other way, they would avoid the imposition of the tax under the bill. And Mr. Chairman, I'm not sure. If it's a tax on sales, so you don't really have to worry about where your electricity comes from. I mean, pretend that 100% of the electricity came from outside of state, but it's a tax on the sale of electricity in Wyoming. And then it's a deduction of all the other taxes paid in Wyoming, at least under this variation on the gross revenues, which I think is probably the better one. That gets at having to fight about where the location is. It's just the sales. I hope that's helpful, Mr. Chairman. Sure. And I'm happy to work with Mr. Taylor more. I always admire the work he does for the cooperatives.
Let me just make sure Mr. Taylor doesn't have a response to those thoughts. Mr. Taylor?
I did, Mr. Chairman. Thank you, Mr. Co-Chair. Appreciate the clarification on that. We've been approaching this as a generation tax. So I've been talking to my generation and transmission cooperatives as opposed to all my distribution cooperatives, because we could probably get a better handle on cost as we break it down to the distribution level. So I mean, our opposition still stands, but it's good to know that it's based on the sales and not actually the generation megawatt hours. Thank you.
Mr. Chairman, just
Senator Case, yeah.
Be absolutely clear that the bill has both versions kind of in it, the
right.
Power tax and then the staff comment. I mean, I've gone through the data from both of them. I think the gross sales amount is really superior and probably a better idea in terms of the multi-state protocol, what other states think, all these kind of things. So be a little easier to put in place. Thank you, Mr. Taylor. We can talk more.
Thank you.
Thank you. Seeing no other public comment from Mr. Taylor. Thank you very much, Sean. Always a pleasure. Committee, we're going to keep going for a while. I think I have another 16 presenters, so we'll let you know when the lunch break will be, but probably about 12:30. With that, Mr. Udell is back. So before we get to Mr. Neal, let's hit Mr. Udell. Welcome to the Revenue Committee.
Can you hear me?
Yes.
All right. I'm with the Local 800 and have been working on the Chokecherry Sierra Madre wind farm. And I just want to say that I oppose both of these taxes simply because I've witnessed the positive impact that our project and the surrounding projects have had on the communities. And simply because I feel that if this goes through, I'll be looking for work out of state.
Very
Remain competitive.
Questions for Mr. Eno? Not seeing any, but thank you very much for those comments. And remind, where in Wyoming are you again?
I live in Riverton, Fremont County, but have been working on the Sierra Madre chokecherry project down in south of Rawlins.
Excellent. We've been building that project, and hopefully in the next couple of years, it's fully online. Every 6 months, we get a little closer right now. All right, seeing no further questions, appreciate your time today. Thanks for coming back with us. Enjoy your.
Thank you, sir.
Mr. Neal, welcome to the Revenue Committee.
Thank you, Mr. Chairman. I appreciate the opportunity. Happy holidays to all. My name is Dan Neal, and I'm speaking to you today on behalf of Wind Wyoming's Way. It's a political action committee formed by Wyoming people concerned about the pace and impact of renewable energy development here. We support Representative Hallinan's proposal to increase the wind production tax and the repeal of the 3-year exemption. As you know, Wyoming for decades has taxed the state's energy producers to generate funds to address the industry's impacts on the state. Taxes help finance the infrastructure, such as roads and highways, that help companies build and operate their projects. These taxes also help ensure the ability of the state and its communities to provide the companies with the services they need. The industry opposes this tax. We get it. They're better off without it. But let's look at a little history. The coal companies and oil companies that jumped into the big energy boom of the 1970s felt the same way. These are corporations, after all, whose ultimate responsibility is to their stockholders and their bottom line, not to the people and state of Wyoming. Big coal and big oil did not want to pay a severance tax, yet Wyoming's leaders at the time, Governor Stan Hathaway and Ed Herschler, and the state legislature imposed them anyway. In 1969, Wyoming passed its first severance tax, 1% tax on all minerals, paid annually on the previous year's production. The state did not stop there, however, despite all the cries from the companies that taxes would force them to take their business elsewhere. Tax on oil and gas was raised to 4%, and in 1981 to 6%. Coal saw its severance tax rates go up and down a number of times. Rate generally ranged around 7%, but in 1977, the state imposed a special severance tax on coal, calling it a capital facilities tax, to generate $160 million. The additional tax expired in 1987 after the money was raised. A separate 0.5% severance tax on coal was imposed to produce extra revenues for the Permanent Mineral Trust Fund. A second severance tax increase in 1978 placed on coal, uranium, and trona was in effect until $250 million was collected. It expired on January 1, 1993. I point to the 70s and 80s because at the time, just like today, the nation was dealing with a big environmental problem. Coal-fired power plants were pouring sulfur into the air. The pollution created acid rain that threatened the Great Lakes and the Americans who lived near them. Country wanted Wyoming's low sulfur coal to help solve the sulfur pollution problem. Our state leaders then helped clear the way for the new mines, but still made sure that Wyoming was compensated for the massive impacts of coal development, particularly in the Powder River Basin, but elsewhere as well. And don't forget that these companies had to operate under both federal and state regulations. Congress in '69 had just passed the Federal Coal Mine Health and Safety Act. And in 1977, it passed the Surface Mining Control and Reclamation Act, which established rules to assure environmentally sound operations and reclamation of mines. The law significantly also established the abandoned mine land reclamation program that imposed a new tax on every ton of coal produced. Despite the continuing uncertainty in the state's tax structure and the regulatory structure, mining companies prospered and the state prospered along with them. Since the 70s, the state legislature has continued to adjust Wyoming's severance taxes, sales taxes, and property taxes. The arguments don't change much when a hike in taxes is on the table. We always hear that increasing a tax, today it's the wind power tax, will drive business away. Yet we know the coal industry developed where the resource was richest. Wyoming has some of the richest wind resources in the country. There's concern about how Wyoming's taxes stack up against neighboring states. We contend that you should not focus exclusively on the power production tax when considering our relative position with other states. For example, South Dakota's sales tax rate is comparable to ours, including the option for local governments to impose their own sales taxes and gross receipts tax. But our Dakota neighbor imposes the sales tax more broadly than Wyoming, whereas, you know, our tax exempts many items and services. You're well aware that Wyoming's property taxes are among the lowest in the nation and that we do not have an income tax. So at about 1/10 of a cent per hour, the proposed production tax credit, or production tax, equals roughly 1/15 of the federal production tax credit granted projects that start construction this year. It's a tiny amount. Moreover, we know Montana is considering a production tax. Does that mean wind projects that might have been built in Montana now will go elsewhere? What will shifting tax policy in other states mean? We believe that Wyoming needs a higher production tax to, one, provide revenues to all levels of government after these projects are built and sales tax revenues from them sharply decline. Second, the taxes needs to be raised to augment property tax revenues that will decline over time as the companies depreciate the turbines and other components of a wind project. It's already been stated that most of these projects generate electricity that's shipped out of state. It's worth thinking that states on the coast are using Wyoming as a colony. We, the colonials, supply them with low or no carbon power while they escape the impacts of these projects. As has been stated earlier, the impacts are large, but especially when the projects are placed on undeveloped public lands. Public will lose access for some activities. Wildlife habitat is fragmented. In too many instances, it's in critical winter range that sustains game populations. And you've heard earlier testimony about this new study that has found that pronghorn avoid the looming turbines erected in winter habitat. You know, the turbines kill birds and other critters, and we see Wyoming's beautiful open landscapes lost to industrialization. You know, I personally love driving around the state and hitting those regions where I can look around, often turning almost 360 degrees and think there's not a damn thing out here. Those open spaces wrap around people, give them something that is not available in many other places. But take a look now at the south end of the Shirley Basin. Turbines stand across the areas that were open and empty, except for the elk herd that regularly drop down out of the freeze-outs. We won't see turbines in Wyoming's most famous places, Yellowstone, Jackson Hole, and the North Fork of the Shoshone. There, coalitions of business and conservation advocates defend them. But there's no greater Shirley Basin coalition protecting these beautiful wild spaces, known largely only to the people who live here. There's no group with activists and donors from the country standing up for them. I think of these as our places, the ones we know and value for their expanse and the eagles and hawks that soar over them, and sometimes because so few others know they even exist. We understand the enticement of a sudden infusion of activity and sales tax revenue, but we need to plan for the longer term. Let's think about the next 50 to 100 years, just not the next 2. And if increasing this wind power production tax slows the development, what then? Perhaps a pause in this modern day gold rush would give the state some time to think about renewables and how we can reduce their impacts. We may want to declare some places, Red Rim south of Rawlins comes to mind, declare them off limits. There are places too important for views they provide, for the habitat they contain to allow this kind of permanent industrialization. Let's raise the tax. Utilities and the developers will internalize the cost, which means their consumers, the large majority of them outside Wyoming, will pick up the tab. Tax represents one step in the effort to figure out how to ensure that the wind power industry pays its fair share of state operations and contributes to the protection of the Wyoming we love. Thank you. I'm happy to answer any questions.
Thank you, Mr. Neal. Committee Representative Hallinan has a question. Go ahead, Tim.
Well, thank you, Mr. Chairman. I'd just like to thank Mr. Neal for putting these issues in perspective. And I do appreciate very much his comments. So thank you, Mr. Chairman.
Mr. Neal has been testifying for at least 20, 25 years. So I always appreciate his comments. Anyone else? Seeing none, thank you very much, Dan. Always a pleasure to see you.
Thank you very much.
Committee will take at least 2 or 3 more here, and I think I'll try to get you to lunch at 12:30. With that, Mr. Quiros, I don't know how you say it, but welcome to the Revenue Committee. Floor is yours.
Thank you, Mr. Chairman. It's Quiros, a little bit difficult to pronounce sometimes. My name is Joseph Quiros. I'm a businessman from Lander, and I'm here to support Representative Hallinan's proposed legislation to raise the wind power production tax and repeal the 3-year exemption. My only connection to the energy industry is as a residential tax or a ratepayer, and I'm very grateful when at that. It's cold outside today. I have lifelong experience watching and living in boom and bust economies, and I'm aware of how much suffering there is when the bottom falls out. Our natural response is to fix a bust as fast as possible, and that usually means to create jobs, and I appreciate that. The problem is that we often forget about the long view when we're in an emergency. Wind infrastructure construction does create some jobs, but they are few. What is long-term about wind power is the footprint it imposes on the landscape. A coal mine is reclaimed and you have trouble finding it after a few years. A gas head is something you have to look for. Most people who drive over them have no idea what a trona mine is. In all of these, the big empty remains just that. Wind will be developed in Wyoming, but a wind turbine field is forever, at least in human terms. Your great-grandchildren will still be looking at and hearing those turbines or the bigger ones that'll eventually replace them. Most of our wind energy will be exported. Wind power users in Las Vegas and Los Angeles may feel virtuous that they're using what they think of as clean energy at an affordable price. But for us, it's very expensive. Most of you are familiar with the economic concept of externalities. But for those of you listening who are not, I'll supply a definition. It's a cost caused by a producer that is not financially borne by that producer. It's kind of like being invited to a splendid dinner at a fancy restaurant, only to realize that the guy who invited you is only paying the sales tax for the dinner, but leaving you with the bill for the food and the drink. The erection of wind turbines imposes costs on the Wyoming landscape and its citizens far beyond what is compensated by existing taxes on the companies. That means we pick up the balance of the bill. Wind turbine fields remove the ability to use great swaths of land for any other purpose. They limit our options. End users are expected to pay for the cost of the product they purchase. It's only fair that end users participate in the full cost of this kind of energy production. They can turn off the light switch in Los Angeles, but we still have monsters cluttering our landscape. There's a fear that by imposing realistic taxes on renewable energy development in Wyoming, producers will go elsewhere. But that argument supposes that citizens in other states will not value their contributions to production as lovingly as we do in Wyoming. It also assumes that production will be as efficient in other places. We know that's not so. The 3-year tax exemption makes no sense, and neither does subsidizing power producers at the expense of Wyoming citizens. I ask you, please do not sell Wyoming cheaply. Thank you, Mr. Chairman.
Thank you, Mr. Wares. Any comments or questions for the presenter? Seeing none, certainly appreciate you waiting around today to testify, and those are powerful words. I hope you
Thank
have
you.
enjoy the rest of your day.
Thank you, sir.
Mr. Ryder, I think, was next, but I'm not sure if he was trying to get in the room and his computer might not be working. So Mr. Is it Bloin? Welcome to the Revenue Committee. If I mispronounced that, I apologize.
Thank you, Mr. Chairman. It's Bluen, but that is okay.
The floor is yours.
All right. Thank you, Mr. Chairman, members of the committee. My name is Nate Bluen. I'm the policy manager for the Interwest Energy Alliance, representing the utility scale renewable energy industry across the Intermountain region. Thank you for the opportunity to discuss these significant changes to Wyoming tax policy today. The best way for Wyoming to get more money from wind and solar is to let the industry grow. More projects equals more money for the state. Interwest opposes each of the proposals before you today for one overarching reason. They make Wyoming uncompetitive in the regional marketplace, meaning fewer jobs, fewer projects, and less money for Wyoming. As we've discussed today, the wind industry currently pays 3 distinct taxes in Wyoming. We pay property, sales, and generation taxes currently. A narrow tax not imposed, this is the generation tax, is a narrow tax not imposed by even a single other state. So right off the bat, that tax structure puts Wyoming wind projects at a disadvantage. And if the earlier discussion about extending it to solar happens, that would do the same for solar production. When a utility releases a request for proposals for a new resource, it typically solicits bids from a wide range of technologies across a broad geographic region. The utility often ends up with hundreds of bids for that same proposal. The utility, or some of those bids might be for potential projects in Wyoming, but certainly not all of them. The utility picks the best projects, with cost often being the most important factor. And the delivered cost also includes transmission, which gets more expensive the further you get from a load center, which makes Wyoming energy costly to deliver across the West. So while it might be windy here, the distance alone makes projects more expensive. While you consider proposals to make Wyoming renewable energy less competitive, the states you're competing with are doing the opposite. They are creating competitive environments for the industry to thrive. Just as developers are competing to win bids, states are competing to make sure projects are built at home, ensuring that the good paying jobs, stable tax base, and economic diversification are realized in their state. The continued discussions of a tax increase here have been enough to keep many developers from making serious efforts to build in Wyoming. And a tax increase that adds $1 or more, which can amount to over 5% of the bottom line cost of a bid price in a market where bids are lost by a few cents, that'll have a chilling effect on the industry's future in Wyoming. Fewer projects equals less money for the state. There is strong support for the growth of wind and solar in Wyoming and the billions of dollars in investments that will come with it over the next few years. As you've heard from county officials, ranchers, coal and natural gas operators who have been employed by wind projects and hopefully solar as well, and from Wyoming's next generation of leaders. These investments amount to tens of millions of dollars in tax revenues, payments to landowners, wages, and other economic impacts every single year. And you can help unlock that for the state by voting against these proposals today. Thank you, Mr. Chairman. Happy to stand for any questions.
You're on mute, Mr. Chairman.
Mr. Chairman.
Oh, good. Hello?
Mr. Chairman, I believe you will have to unmute on computer with the keyboard on the staff desk. I'm not sure how you got muted.
How about now?
You got your sound on too.
How about now? Give us just a second. We're having some technical difficulties because I don't have the PIN number to the master computer in the room.
Mr. Chairman, I did just send that to you.
Is she from Laramie?
Can you hear us now? How about now?
Yes, Mr. Chairman.
All right. So while I still have Nate here, let me make sure, Representative Sweeney, did you, any questions for West and Nate before
Thank
we?
you, Jamie.
Okay, I don't see any questions, Nate, but thank you very much for being here with us today. I'm not sure exactly when I cut out and what the last things everyone heard were, but I certainly appreciate that. And then Ms. Hensley, welcome to the Revenue Committee. You have the floor.
Thank you. And hello and good afternoon, members of the Joint Revenue Committee. My name is Roxy Hensley, and I'm a lifetime Wyoming resident. I'm a small business owner. I own numerous businesses throughout the state. And I'm a proponent of all of the above energy strategy for the state of Wyoming. I'm here today to speak to the economic and community benefits that wind power projects deliver. As you may know, each year wind projects in Wyoming provides more than $8 million in state and local tax payments and a further $11 million in payments to local landowners. That is nearly $20 million in support to local communities and the state each and every year. A contribution that would continue to grow as the industry grows. As a former resident of Converse County, where much of Wyoming's current wind power is located, I can personally attest to the positive impact that these projects have on the community and local businesses. My husband and I have been small business owners in Converse County for nearly 30 years. Early on, coal industry activities supported much of the economic livelihood in Glen Rock. However, as mines began closing or downscaling, wind power development really stepped in to fill the void. As the various wind projects north and south of Glen Rock were being constructed, the crews filled our restaurants, our restaurant, and our bar, and were a lifeline during the otherwise troubling years of the recession. Thanks to wind power, we were able to keep our doors open and growing. Glen Rock also benefited greatly from these wind projects. New tax payments helped to support local school budgets and allowed the county to make needed improvements in infrastructure and other services. Without the contributions from these wind projects, it is unclear if these investments would have occurred. Equally important, these projects help to provide local farmers and ranchers with a drought-resistant crop that they can rely on to keep the family ranch in the family. Just ask many of my friends in the Glen Rock area, and they will attest to the important contributions these projects have made. Unfortunately, until recently, development activity around Glen Rock and throughout the state, dried up for a number of years due to the implementation of wind energy generation tax. This tax made Wyoming wind power uncompetitive with neighboring states. As a result, the wind industry took off in states like Nebraska, Colorado, Kansas, and the Dakotas, delivering jobs and economic benefits that could have been delivered to Wyoming. Wyoming is in competition with surrounding states and must work to provide business-friendly environment for the wind industry to prosper in the state. Sure, the wind generation tax delivers revenues to the state treasury, but by discouraging wind development here in Wyoming, it limits a much larger source of economic benefits that far outweighs these tax revenues. Restoring Wyoming's competitive winds competitive by not adjusting this tax or eliminating it altogether will deliver more economic prosperity for the state. The jobs created, the property taxes paid, the lower cost of electricity for consumers, and the increased industrial activity in the state will more than make up for the lost tax revenues. As I consider the potential for new wind developments in Wyoming, I am encouraged by the opportunity this affords. Wind and other renewable energy projects will deliver benefits for communities across the state, for local businesses, for school districts, and for Wyoming's energy security. I'd love to see my restaurant full of wind farm construction crews and the operations and maintenance crews that will follow. As I currently live in Laramie, I'd love to see Albany County school districts get a much needed influx of funds to support the good educational work they are doing for our children. And I'd love to see the city, the county, and the state benefit from the investment and tax payments these projects will bring. At this time of economic uncertainty and financial duress, we should not be turning away companies and industries that value the great resources that Wyoming has to offer. Instead, we should be encouraging, inviting them into our community with open arms. These investments will benefit everyone, especially at a time when other industries in our state are struggling. Again, as a lifelong resident and small business owner, I strongly encourage advancing wind and other renewable energy development activities across the state. I have seen firsthand how these projects benefit businesses, communities, and recognize that renewables are the next frontier in Wyoming's ever-evolving energy landscape. Let's seize this opportunity and capitalize on the investments they bring to our community. Thank you for allowing me to speak today.
Thank you very much, Ms. Hensley. Any questions? I'm not seeing any from the committee. With that committee, we have one more presenter before lunch here in Cheyenne, Ms. Johnson from the Wyoming Economic Development Authority. Welcome, Lisa.
Thank you, Mr. Chairman, members of the committee. Lisa Johnson, Wyoming Economic Development Association, representing 150 members statewide. Our members are economic development corporations, cities and counties, private businesses, individuals, industry associations, higher education, and our state and federal partners, all working to position Wyoming for economic growth by fostering entrepreneurs, supporting expanding businesses, and attracting new companies and developing a skilled workforce. We believe that local and state economic development efforts should be based on consistent strategies to encourage private sector development. And the industries that are most important to focus on are those that export a good or service outside the state and bring new revenue into the local economy. These industries that provide higher than average wages expand the economic base of Wyoming. We support tax policy and incentives that allow Wyoming to remain competitive in encouraging ongoing capital investment and primary job creation. Wyoming Economic Development Association opposes the energy generation tax. Electric costs and reliability are one of the top considerations when companies are considering moving to a new location, and increased energy taxes overall puts Wyoming at a disadvantage in business recruitment. Wyoming Economic Development Association opposes the wind energy production tax. Capitalizing on wind projects are difficult, and increases in taxes make it more of a challenge, making Wyoming less attractive than other states from a competitive standpoint. Economic development is a long-term process. The proposed legislation hinders our ability to generate new economic activity, potentially putting billions of dollars at risk. For these reasons, the Wyoming Economic Development Association is opposed to the electrical generation tax and the wind energy production tax. I'll be happy to stand for any questions.
Questions for the Wyoming Economic Development Association? Looking through the committees and the screens and not seeing any currently. Thank you very much, Ms. Johnson, for being here today. All right, with that committee, I think I've talked to all the presenters for this afternoon, or at least sent them emails or messages on Zoom, and they can all come back after 1:45. So with that, we're going to take a recess until 1:45. We'll be a little bit behind schedule today, but hopefully we'll make it up during education funding. Reminder to turn off your cameras and your microphones, and we'll see you back here at 1:45. If you're on the YouTube, you will have a new link for this afternoon. This one will go dormant, and you'll have to relog on to watch the Revenue Committee on YouTube. Thanks.